800. This is Bloomberg. Stay with us.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
This morning, consider GameStop is trading 63% lower than the $512.13 top tick of 3 days ago. Consider that silver is rolling over. Consider that Robinhood must go IPO, must go direct listing, or must go SPAC to appease those that bailed them out. Futures, well, they lift. Yields, too, as tech reports from A to A. That's Amazon to Alphabet. And Biden, well, Biden goes bipartisan. Romney on the couch. The president takes a, quote, substantive and productive meeting. The left is left out in the cold of the blizzard of 2021. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in the blizzard in New York. Francine Lacroix in London. Francine Lacroix in glasses because of an injury. Let's go to our crime report right now. And this is an important report. Let's look at the evidence that we've got right now. There it is, the dinosaur that was tossed and bounced off her head as well. We report that the child is in Newgate.
Tom, I have to say, yeah, he took the 6-year-old stopped, looking at Reddit for 5 minutes and attacked me with a dinosaur. We were kind of playing. The problem with homeschooling is that all rules go out the window. Suddenly, we're like playing football in the kitchen. We play fight at all time of day. And yes, a dinosaur tail, I think. I'm not sure if it was a tail or foot, got into my eye. Hence, I'm channeling Tom Keene with my new glasses. I quite like it.
Yeah, it's very good. It's like a themer. We got to get Pharaoh in Black Rims and Lisa and the rest of it as well. It could be like surveillance with Black. Did the child survive?
The surveillance look.
What was the punishment for the child?
No punishment, Tom, because he was so distraught. This is the other problem with homeschooling, is that you wonder whether you're just making, kids that are almost too soft. You kind of say, you have to stop that, Alessandro. And he's like, I'm sorry, I didn't realize the dinosaur was alive. And that goes into paleontology. I've lost control, Tom, of my household.
You have lost control.
That's what it goes. I've lost control. I'm getting control back.
Anyone else would have taken a week off, LaCroix, on the watch today. Right now, the huge news flow, folks, and yes, we'll get to GameStop down a little bit. Right now, our first word news in New York. Here's Ritika Gupta.
Morning, Tom, Francine. President Biden intends to keep pushing for a large pandemic relief bill, even if he has to bypass Senate Republicans. The president and 10 GOP senators had what one lawmaker called a very productive meeting on stimulus options. A White House spokeswoman said there were areas of agreement, but also areas the Republican plan doesn't address. The president wants a package about 3 times as large as the one Republicans are offering. And President Biden will keep U.S. tariffs in place on aluminum imports from the United Arab Emirates. He's reversing a last-minute move by Donald Trump to grant the UAE relief from the duties. The president says the evidence indicates that imports from the UAE may still displace domestic aluminum production. And it's an early milestone in the race to end the pandemic. More Americans have received at least 1 dose of the coronavirus vaccine than have been tested positive for the virus. As of yesterday afternoon, 26.5 million Americans had gotten 1 or both doses. The U.S. has been administering shots at a faster daily rate than any country in the world. And in Moscow, a Russian court is deciding whether to jail opposition leader Alexei Navalny for up to 3.5 years. Prosecutors want Navalny to serve the term in prison instead of the suspended sentence he received for a fraud conviction back in 2014. The court hearing comes just a couple of days after the second straight weekend of protests against President Vladimir Putin. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Let's look at equities, bonds, currencies, commodities away from GameStop, Robinhood, and the rest of the ballet. Futures up 35, 3,800 level on SPX. Dow, 30,369. I'm going to say the Dow lags, even though up 259 points today. NASDAQ on a tear. We'll get to that in a moment. The VIX, 27.14 gets my attention, and critically, we enjoy higher yields this morning. Francine?
Tom, I'm looking at global stocks, and you're right. Look, this is on renewed hope of stimulus, progress on vaccination, and also some of these receding concerns about the volatile retail trading. And if you look at silver, for example, it's pulling back from an 8-year high. I would mention sterling simply because that's at 136.74, and it does seem that it's a vaccination trade back on because the UK is administering more doses, administering them safely and quickly.
Very good. Let us start today with GameStop. I want to frame right now where GameStop is. We're down 63% from the 500 level where I went long. We're sitting at a 179, 180-ish level on support. The next support level is about 100. I'm being vague here. Stay with me. And silver just flat out rolls over. Jeffrey Curry long on silver, certainly on a long-term basis. Right now, the voices of the short squeeze.
The reason it's all happening is because there is a lot of cash out there moving.
I assume hedge funds are probably reluctant to short small cap stocks right now for the fear that the Reddit brigade might be behind those.
Not really much was done wrong here.
I want to do whatever we can do to help the retail investors.
The investor that gets caught in the updraft on that and doesn't understand that investing, while it looks like it's all going up, you've just told me that they're down 34% today. Did the person who clicked the last buy understand that that could happen to them that quickly?
Investing is buying assets that generate income, that provide dividends, that produce profits and appreciate in value over time. And, you know, long-term investors have the benefit of those returns compounding. When you're speculating, you're in essence buying a lottery ticket.
I like to think that under the new administration, there's more social utility, there's more enforcement.
Because of these small pockets of volatility, we think that the markets probably in the near term will continue to be quite worried and concerned about it.
Some of the voices that we'll see more talking today as well. Stephen Auth doesn't have to talk. He's got 4 decades of work with Federated Hermes and before that Prudential at being an adult in the market. And we're thrilled that Mr. Auth could join us this morning. Steve Auth, one of the people there just mentioned social utility. What is the social utility of free commissions if they're really not free commissions and there's a hideaway, hidden away about flow of trades?
Well, I think they're referencing, Tom, just getting retail more involved again in the market, which generally is a healthy thing. It's price discovery. And I think having retail investors in the market is something we've really lost since the big Great Depression back in 08, 09. So I think it's generally a healthy thing. You probably saw my piece called Bubble, Oil and Trouble. I would view, I think we've got a couple of bubbles going on here, but not the overall market. I mean, you know, the total market is trading on our numbers at around 18 times 2022 earnings. So abroad, and that's against a bond backdrop that's 1.5%. We're not in a bubble yet, and bubbles don't burst anyway until the Fed gets involved. And you know, we think they're a ways off.
If we start, Steve Auth, with the idea that it's not 2000, it's not March of, I believe it was 2001, I can't remember right now, but if we say that we're not bubblicious as we were back then, nevertheless, we have a generation of IPOs, the SPACs, the direct issues and such. Are we fooling ourselves that, yeah, it's different than 2000, but not that much different?
That is another kind of bubble that's forming, right? On the one way, the negative bubble, you know, stocks with a negative story, and then you had the other side of that, like fear and greed on the same side of the trade, basically, with GameStop, right? That's what's going on. What you just alluded to is what I call the good story bubble, and you know, growth investors spend a lot of time trying to go through good stories and find the ones that they think can forward compound at very attractive rates and maybe create the next Apple or Amazon. The problem that going on now is more and more of these stories are coming to the market before they're really ready. And it itself is becoming a very speculative game. And what's happening is a lot of people are jumping in simply because, not that they've done the work on that particular story, but because they like the story and the stock's going up or it's going to go up. That's dangerous. You get a lot of people involved in a name without a real concrete reason why they're in it, other than they think someone else is going to buy it higher. And that's a dangerous game to play. So frankly, Tom, on the SPAC side, we are involved there, you know, but we've done, you know, a handful of them out of the dozens that are come to the market at this point. I'm not even sure, it's probably over 100. I think there's going to be some good stocks there eventually, you know, that come out of it once they IPO, but it's not for the faint of heart, and the idea that you're just going to get money, make money jumping in there is not a good idea in my mind.
Stephen, good morning from London as well. Let me ask the flip question. What's not in a bubble? I mean, how much of the market right now is not at bubble risk territory?
Well, broadly, the entire market, right? I mean, if you take the earnings of the entire S&P, in 2022, which I'd argue is maybe the first normalized year post all of this, you know, craziness with the economy and COVID, you're trading at 18.5 times earnings. You know, you could look at an Amazon. The stock has, and it's a big stock in the market, right? I mean, it has been making time since last August. It's trading at low 20s on free cash flow. It's compounding its cash flow at 25%. I mean, that seems to me to be a fairly attractive investment, actually. That's not a bubble stock. This is nothing like, you know, and Tom, you know what it was like back in the late 90s. You had stocks going up on clicks. You didn't have the cash flow underneath it. Now the big market leaders are big cash flow compounders. And when you overlay that with maybe the first simultaneous global recovery, really simultaneous, because it's all timed around the COVID vaccine going global, which it should by the time we get to summer. I mean, that simultaneous recovery is going to really help all the cyclical names. So you kind of got everything working at once, we think, for this market.
So, Stephen, I mean, first of all, the global vaccine rollout, we don't 100% know how effective it will be with new strains. And what happens, I mean, I don't want to be down or sound downbeat, but what happens when central banks start normalizing if there is a whiff of inflation?
Well, I think you're right about the central banks. That's finally, that's the ultimate risk here. And, you know, once they start getting nervous about inflation and overheating, and they start to blink, or they blink for the first time, I think that could cause a little indigestion in the market for sure. It doesn't seem like we're anywhere near that this year. I mean, given all the noise you're getting out of them and all the concerns about growth, so and unemployment being so high. So I think the central banks are off the table for this year. We'll see. We think there's a commodity cycle coming. But I think you're right to be worried about the central banks. That's, to us, the central risk to this market. But we just think it's a 2022, 2023 story, not a 2021 story.
Stephen Off with us. Thrilled that he's with us here, and we will continue. Coming up, much more to talk about here with futures up 36, Dow futures up 265. GME has just rolled over. It's had actually a pretty nice bid off the fragility of the last 24 hours, and that has abruptly ended about 2 questions ago to Mr. Oth. GME, a 171 level right now. I'm going to call support at 170, so we'll watch that carefully. In the 12 noon hour, David Miliband from International Rescue Committee will be with us. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We have demonstrated in the last year that we can come together on a bipartisan package dealing with the COVID crisis. In fact, we've done that not just once or twice, we've done it 5 times. And I am hopeful that we can once again pass a 6th bipartisan COVID relief package.
My head is spinning. I'm not going to mince words. Like, I'm pretty good at this. Like, I read about it a lot. And I really don't understand what I saw last night with the gentleman from Utah on the couch with President Biden and the rest. Here, Emily Wilkins right now to join us, our congressional reporter. Emily, I'm going to call it the reconciliation of the moderates. Let's begin with the GOP. How did the GOP respond to this meeting of 10 moderates with the Democratic president?
We've heard a couple different things from Senate Republicans. A couple of them have come out and said, look, even the bill that their Republican colleagues have put forward isn't necessarily something that they're going to be able to sign on with. But on the other hand, a lot of people are sort of pointing to this as a really good show of bipartisanship. I mean, remember, this is Biden's sort of first big meeting with legislatures, and he's taking it not with members of his own party, but with Republicans.
Okay, he's taking the Republicans. Let's swing over to the other side. The left here wants reconciliation, which rams it through, as happened, I believe it was in 2017, with other legislation as well. What is the response of not only the left, but the moderate left of the Democratic Party to this meeting?
Well, the Democratic leaders in Congress, Chuck Schumer and Nancy Pelosi, they are preparing to go through this reconciliation process. They're queuing it up this week, sort of the groundwork foundation to think of ultimately having this Democrat-passed bill. And even the White House, you heard them after the meeting last night. They said, you know, while there were areas of agreement, the president restated his view that Congress needs to respond really boldly right here. Biden doesn't want to sort of make the same mistake of the Obama administration was seen as making of not providing enough aid in a moment of economic crisis.
Emily, if this gets through without bipartisan support, what does it, set up the Biden administration to do in the future? Does it kind of set them up, does it really rile the Republicans even more against them?
Two things here. Number one, I will say that the Biden administration is pointing out that even if they do the reconciliation process, that doesn't stop Republicans from going ahead and supporting it. Obviously, it makes it a little bit harder if Republicans feel like they were not let in on the negotiations of a bill. Look, COVID-19 is one of those kind of rare areas, I think, of bipartisanship. There are a lot of issues with a lot of partisan tensions. I'm thinking immigration in particular, which the Biden administration has put forward a plan on, that you have seen a lot of sort of divisiveness between Democrats and Republicans. So if they can't come together on an issue like COVID-19 and this pandemic our nation is facing, it might be a little bit harder for them to come together on these more partisan issues.
Yeah, and I'm looking at the Republican plan. It definitely reduces the stimulus checks proposed by Biden from $1,400 to $1,000, tighter income limits. It, limits the minimum wage increase, and I think includes just $20 billion for schools compared to $170 billion that the White House plan has. Emily, what kind of timeline are we looking at?
So it depends how things move forward. Oddly enough, if there's actually a bipartisan agreement, things can move a little bit faster than it can with a reconciliation bill. A key deadline to keep in mind here, March 14th, that's the day that the current supplemental benefits for unemployment insurance run out. And that one has support from both sides. And so lawmakers don't want to see that run out. They want to come to an extension before that date. The question is just exactly how much they're going to be able to get through, because remember, next week, the Senate starts the impeachment trial, and that requires senators to be at their desk listening to the arguments. It takes a lot of time out of the work they're able to do.
Emily, I did the math on the Republican view and the grosser Democratic view of $1.9 trillion, and I came up with a center tendency of about $1.259 trillion. Is that enough to get the gentleman from West Virginia to go along with President Biden?
You have seen Manchin that he does have an eagerness to help out Biden, move his agenda forward. Manchin, I don't think you count him out yet as necessarily a no if this isn't something that's bipartisan. He has stated that he, feels an obligation to help Biden as president. And yesterday, you did see the governor of West Virginia, Joe Manchin's home state, come out and go ahead and push for this larger spending package. And so it does seem like Manchin has a little bit of cover if he wants to go with the Democrats here, even if there are no Republicans who come with them.
Emily Wilkins, thank you so much for the briefing here of the meeting yesterday of the GOP with the Democratic president. On Balance of Power today, a woman really, really good on the auto industry and manufacturing America, Ellen Hughes Cromwick, former chief economist of Commerce, will join David Weston. Balance of Power.
Okay, ladies and gentlemen, I'm going to place stop on profit. I just pointed out here. Let me show all of you. As you can see from our ticker, this is the position we hold it for euro, short positions on euro. And I'm going to place stop on profit for 120.40. So when it will reach this level, basically I'll sell all my positions. Okay, so let me show you. We hold position or 6 positions on euro against United States dollar. So we'll close all these positions. This at this level, this and this level, at this level. Also, we'll close these positions and we'll close this position. Sorry. This position. Okay. If you will reach the price 120.40. Okay, let's wait. Let's see if it will go further down. I will keep my stop on profit even better for me, so basically lower in this case, in order to get more profit. Okay, speak to you later, guys.
Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. BP showed that big oil is still suffering from last year's historic slump. The British energy giant posted earnings that were worse than expected on weak fuel sales, refining margins, and gas trading. Profits declined 96% from a year ago. BP CEO Bernard Looney predicts better days this year. And bears appear to have started covering their GameStop positions in earnest. Short interest in the video game retailer fell to about 39% of free-floating shares. That's down from 114% in mid-January. GameStop lost nearly a third of its value yesterday after soaring 1,600% in January. The short interest promoted hordes of day traders to pile into the shares. Meanwhile, the biggest backers of Robinhood are putting money into the beleaguered online brokerage at a record pace. Investors led by Ribbit Capital poured $2.4 billion in the firm yesterday. The cash infusions comes as Robinhood grapples with outraged customers, increased scrutiny from Washington, and questions about plans for an IPO. And that is your Bloomberg Business Flash. Tom.
Ritika, we've been doing broad data checks. Let's go narrow right now. GameStop gives way. There's no other way to put it here. What you need to know is 190 down to 175. A churn here at call at 173, and we have now plunged, not yet finding a bid at a 158, 158. Francine?
Tom, I'm looking at global stocks. They're definitely climbing on renewed hopes for stimulus. We had a great briefing by Emily there. Progress on vaccinations also lifting, but I would point to, of course, what's happening with silver, pulling back from an 8-year high. And then, look, it's very clear that this retail frenzy, for the moment, is showing indications of cooling. Treasuries dipping alongside the dollar, oil climbing, and the sterling 136.74. Coming up, Harvey Pitt, former SEC chairman and Kalorama Partners chief executive officer, will talk to him about Robinhood. This is Bloomberg.
Focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything that's going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops, infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, stay on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so forth.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Bloomberg Surveillance, Francine Laquan, Tom King. Joe Weisenthal only enters the hermetically sealed studio when GameStop plunges. Let's look at the chart right now here. GameStop, I don't like to give my technical statement here because I'm not in the business of the market, but let's just say we were down 63% from when I went long at $512 per share, and we're going down right now. Let's call it, I got it right here, Joe, 158 on GameStop. How do short squeezes end?
Well, I think of shorts as sort of dry powder kindling. Everyone who's short a stock eventually has to buy. That's fuel for the run-up. When everyone finally sort of throws in the towel, or at least the initial shorts throw in the towel. I mean, one thing that's interesting here is that people are looking at sort of crude measures of overall short activity. Some of that could be fresh shorts who got in the short at 450 or 500, not the original shorts. They may not have to squeeze. A lot of these shorts may be in the money.
This is really important. I forgot. I didn't introduce him. Joseph Weisenthal with us, co-anchor of What'd You Miss. We're so excited here about a 158 print. Joe, the bottom line is there's this short interest statistic.
Yeah.
American Airlines is 25%.
Yeah.
GameStop was a crater, 130%. And all of a sudden, GameStop is on the edge of an American Airlines short interest.
Yeah.
Is that a normal statistic?
Yeah, I think it is normal. And I think that, you know, it was inevitable. And obviously some of those initial shorts who were short the stock at like, what, $5 a share, thinking it was going to go to zero. A lot of them almost certainly, we know it, covered a long time ago when the stock maybe got into 200 or 100. We don't really know where exactly. There are still shorts out there, but a lot of them probably doing pretty well.
Joe, there's a brilliant opinion piece actually by Marcus Ashworth, which basically, you know, is entitled "It's Time to Move On from Reddit" because the power of the social media crowd to really take on the system is widely overstated. Is he wrong?
I mean, I would say, look, Reddit and Robinhood were never going to take on the system. And anyone who thought that there was going to be a political or societal revolution from an app on your phone that was funded by VCs to get you to buy financial assets was wildly mistaken. On the other hand, I do think this is going to be a permanent force to be reckoned with on the long side, on the short side. This idea that traders using social media, free trading, can swarm to a stock in a second, drive it dramatically higher in a moment's notice, that's with us forever now. Now, we might not have the perfect storm that was GameStop, where we have a series, lots of shorts out there and so forth, and everything coming together in this incredible story. That's going to be rare. But the idea of swarm buying, pack buying, flash mob buying, social media fueled call buying, weaponized call buying, creating a gamma squeeze, that's all here to stay, and this is going to be a new part of the market landscape, and the traditional investors are just going to have to learn to change their strategy.
Francine, I just want you to know that GameStop broke when Weisenthal's entourage said he'd appear with us this morning. It was like literally 5 minutes before he
I also
showed
like,
up.
Tom, that we're using Greek letters before 6:45 a.m. That's always a beautiful thing, 6:45 a.m. New York time. Joe, when you look at, you know, we had a conversation with Jeffrey Curry of Goldman Sachs, and we were trying to understand whether he thought that some of this, you know, I don't know whether you want to call it activism, but what's been happening on Reddit could actually impact oil through ETFs. I mean, does it, you know, stay with single stocks that have been shorted, or does it go elsewhere in the market?
I mean, I think it's going to be much harder to get anything resembling like this in a gigantic global commodity ETFs and so on. I mean, we see weirdness in ETFs. We saw the weird stuff that happened with USO last summer. Things can happen even that are very strange, even in really big markets. You know what I find fascinating on the commodity front with silver? Not the squeeze, not the SIV, but that in a matter of days, every retail coin vendor online basically was cleared out of inventory.
I sold my quarters collection from 1963.
Wow. Why are you here? I thought you'd be retired then.
No, I didn't. You know, I lost it in
I'm holding on to
divorce.
mine.
Joe Weisenthal, I want to get to Robinhood, which I think is a huge, huge story here. Multi-billion-dollar bailout. I think it's a 30% haircut they get when they go IPO. I want you to explain the ballet of Robinhood as they try to IPO or direct or SPAC. There's going to be no transparency, no red herring, no rubber chicken lunch. I mean, is this thing on the up and up if they use those processes?
I think there is going to be a lot of skepticism. I mean, look, obviously it's a phenomenon, and I don't think it's going away. Companies run into hiccups. Is it a profitable
phenomenon? The answer is no.
But potentially, I don't know. I don't know the answer, but potentially it could be very profitable. Their sort of core model, the payment for order flow model, highly popular app. I don't think that's going to change because of a few bad days. I think one way to think about this, look, they've suffered an enormous reputational hit the last few days. The perception, which I believe is false, the perception, however, that they throttled trading because dark forces wanted them to, you know, stop the squeeze. I don't believe that. When you look at the billions that they've raised, I think in part it's so that they never have to do that again. So they want to be able to be the place where people take big YOLO trades and be part of a phenomenon. But when the margin clerk comes calling and says, you need to put up more cash because your customers are doing crazy stuff,
right?
They need to have that cash. So this raise that they've done, I think, is part to never have another GameStop
Let me write the
situation
headline
again.
you would have written for Business Insider 10 years ago here right now, which is not that it's Robinhood, but it's a number of big people behind the scene like Wizard of Oz that own this name, Robinhood. Who are those names, and is it essentially a fiction owned by big banks or Sequoia or the rest of them?
I mean, I guess everything is, but I don't think there's a conspiracy here. I mean,
I didn't say there's a conspiracy.
No, but I think
the
when you think
fact
Wizard of Oz and behind the curtain, I do see why people might think that Ken Griffin pulling some strings. I don't think
Joe, they had $3.4 billion bailout and 3 cups of coffee. Who knows if they even get to, Friday without another tranche of bailout?
Well, I mean, I do think it's pretty striking how quickly they're able to raise the money, and I think that tells you something that the people who who know the company are inside. It was not like they had to go begging for a long time. Sometime in the middle of last week, they got a margin call. They had billions in cash later. I think there's still a lot of enthusiasm behind this company.
Tom, the only question worth asking today is Joe Weisenthal on Clubhouse. I mean, suddenly you had, Vlad of Robinhood with Elon Musk on Sunday night. Is this going to be the new Reddit?
I got on Clubhouse like a few months ago, and I scrolled some rooms, and I didn't really find anything that spoke to me, but I feel like now everyone's talking about it, so I probably have to go back on.
So what when you were on Clubhouse, when the stalwart shows up on Clubhouse, who are you talking to? You talking to Oprah? You talking to Heidi? Who are you talking to?
How about you and I do a Clubhouse?
Francine wants me to do Clubhouse, and I'm
Let's do it.
I don't.
Joe, thank you.
Why?
I would do if you guys, if the two of you, I would do a Clubhouse with the two of you. Let's make that happen. That would be my first time talking about it.
Francine, does Joe know
I'm on Clubhouse. I invited Tom, and he wasted my invitation. So thank you, Joe Weisenthal. 3 p.m. today,
Let's do
Clubhouse.
It. I'll do anytime. I would do a Clubhouse with the two of you. I don't
Francine,
know.
Does Joe know he can't leave unless we get a 99 print on GameStop?
Is that the rule?
Yeah,
that's the rule.
He's stuck here for a
Joe
long
three figures.
Early, what'd you miss? 4 a.m. We did it an hour. Go out on Twitter and, of course, look for his program later this afternoon as well. With our first word news in New York City, Ritika Gupta.
Thanks, Tom. President Biden and Republican senators have agreed to keep negotiating a bipartisan coronavirus relief package, but the president made it clear he'll keep pushing for a large relief measure, even if he has to bypass the Republicans. President Biden wants about 3 times as much in the bill as the Republicans are offering. And Senate Republican leader Mitch McConnell has waded into the intra-party fight over GOP Representative Marjorie Taylor Greene. McConnell didn't mention her by name, but he denounced what he called her loony lies and conspiracy theories. House Democrats are threatening to punish Greene if Republican officials don't take action over her past incendiary remarks and social media posts. And here in New York, we're being hammered by a snowstorm that could become one of the worst in the region's history. Forecasters say the worst is over. Still, the city could end up getting as much as 20 inches of snow. Rail and air service is at a standstill, and roads are impassable at points. And Chancellor Angela Merkel has promised all Germans a coronavirus vaccine by the end of September. That's as long as drug makers stick to their delivery commitments. Merkel has come under fire after pushing for the European Union to take the lead on vaccine purchasing. Critics say that delegating responsibility to the EU has slowed down national inoculation programs. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much, Ritika. Now, we're just looking at the Bumble IPO price. Tom and I off Bumble for at least, 3 decades. IPO, yeah, that pricing, Tom, at $28, 28 to 30 per share. I think it's on the higher end.
Date,
as expected.
Meet, network better.
Yeah,
Bumble.
I think the founders like 32 and a billionaire.
Do you think Bumble's on
many times
Bumble's
over?
On Clubhouse, maybe.
Maybe. I'm sure it will be, actually, after that massive shout-out. We'll actually get on to more serious matters next, because we'll continue tracking also the pandemic with Dr. Amish Adalja. He's Johns Hopkins Center for Health Security Senior Scholar. That's coming up shortly, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix and Tom Keene. Let's get right to it. Futures up 30 right now. On the vaccine and vaccination, Amesh Adalja joins us from Johns Hopkins Center for Health Security and a senior scholar. Dr. Adalja, I want to talk about the x-axis, which is the day after day of it. If we day after day after day do vaccines in America, in the United Kingdom, wherever, is it a linear path to success? Or does it build on itself and really get some good constructive acceleration?
I do think it builds on itself, because what happens is you'll start to have parts of the population immune, and that makes it much more difficult for the virus to spread. So when you've got a population that is 100% susceptible, moving from 70 to 50 or whatever combination that is, that's going to make it harder. So I do think we will start to see benefits, even with the hospitalizations, actually, especially because of the hospitalizations, because many of the people that are the early vaccinees are people who live in nursing homes, people that are elderly, that have high-risk conditions, and that's really what's driving hospitalizations and has been from the beginning. So I do think we'll see a respite in the hospitals. All of this is really contingent on us moving fast, though. We don't want that South African or Brazilian variant, which may be a little bit more difficult to deal with, to really take hold here. So we've got to accelerate significantly and keep ahead of it.
We are getting better statistics, even in New York, folks. I saw a headline of better statistics on cases, deaths, on hospitalizations. Is it a pause before a wave, or can you say there's true hope in the goodness of these statistics?
It's definitely a sustained trend that we're seeing, that this wasn't a fluke of reporting, which is initially what many of us were worried about. But the thing is that it's tenuous, because we've got these variants like the South African and Brazilian specifically, which are more contagious and may pose problems for not only vaccine immunity but natural immunity. And the vaccine works well against those. They will be in terms of preventing serious disease, preventing hospitalization, preventing death, but it doesn't seem to be as effective at preventing infection. So we've got to stay ahead of that, or you will see cases rise, because the variants that are more contagious just by natural Darwinian principles are going to come to dominate eventually. So that's why we've got this window to really, really go forward with no speed limit and get as many vaccines into people's arms to keep.
Okay, ladies and gentlemen, I'm going to move further my stop on profit to 120.38. Okay. So all of you guys who followed my trade, who was waiting for execution, basically to close all these positions, you can place an order to sell all your position at this price. Yeah. All of other people who just follow the trades and don't know what's happened, why, basically, you need to purchase the strategy. You need to get the strategy to see why we sell, why we at this level, what's happened. So basically, you will understand how we trade and why we never lose any money. Okay, so I moved my stop on profit to 120.38, supposed to be, not 37.8, 38. Okay, speak to you later, guys.
Evidence and what's mudslinging amongst European world leaders, right? So we had France saying that the UK is now reckless. They say, you know, they're taking a jab at the way that the UK is proceeding, which means that you get a Pfizer vaccine, but you have to wait 10 to 12 weeks to get the second jab. I mean, what do you know? What's the right way of doing this?
So ideally, we want people to get the vaccine and then get the first dose and the second dose on the approved schedule. So 3 weeks for Pfizer, 4 weeks for Moderna. But we know that that's kind of not necessarily always going to be possible in an emergency situation. And it's important to remember that you do get protection after the first dose of the Pfizer vaccine, probably about a week or so. We don't know how long it lasts. We don't know how durable it lasts because the trials were done on a single dose regimen. But when you get that second dose, you're still going to get the same benefit. You don't have to start over. So if the second dose is delayed for whatever reason, you'll have that period of time where we don't know how long that first dose immunity is going to last. And obviously it's not as robust or strong as having 2 doses, but it is not. It's not nothing, and we do see benefits in the clinical trial after 1 dose. So I think the goal is to keep people on the schedule, but if there is a delay, it's not the end of the world. We don't have to restart, and I think some of this will hopefully be obviated when the Johnson & Johnson vaccine gets approval, hopefully all around the world as well, and it's a single-dose regimen.
Is there a right way of vaccinating the population? Is it above 70s and then above 60s first, or should it be frontline workers?
So I think that's a decision every country really has to make. But we know that we want to stretch the impact of this virus. And what this impact is, what this vaccine is about, really decreasing the death, the morbidity, the mortality, putting hospitals into a place where they don't have to worry about capacity on a day-to-day basis. And in that situation, you want to make sure your healthcare workers are protected, but you also want to make sure nursing home residents, for example, those who still make up a high proportion of admissions, a high proportion of deaths, that they are protected. So I do think vaccinating the elderly and the high risk makes sense from an epidemiological perspective. And it also makes sense to make sure your healthcare workers are vaccinated. I think you can do both. But our goal really is to just defang this virus and make it more like the 4 other coronaviruses that cause common colds by getting people vaccinated and making it something that doesn't ever usually require hospitalization. And I think we'll get there with this vaccine, even against the variants.
Mr. Dalgas, thank you so much. Of course, he's of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up, we speak with Chris Grisanti, My Capital Management Chief Equity Strategist and Senior Portfolio Manager. They'll be talking about the markets and, of course, what's happening with silver and GameStop. That interview, 1 p.m. in London, 8 a.m. in New York, and this is Bloomberg.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg Business Flash. Boeing is signaling that it is at risk of losing more than a third of the orders for its 777X jet. That's because the latest delay to the plane's debut gives some customers the right to walk away from sales contracts. Last week, the company said the 777X now won't take to the skies until 2023. The Pentagon is going to college to try to fix its most expensive weapon system. The Defense Department is tapping the expertise of 3 top universities, Johns Hopkins, Carnegie Mellon, and Georgia Tech. They're being asked to figure out what must be done to fix software problems on Lockheed Martin's F-35. The plane is a flying computer, and bulky software has been a nightmare. And Apple has taken advantage of cheap borrowing costs. It tapped the debt market for the third time since May, selling $14 billion of bonds. The iPhone maker wants to return more cash to shareholders. Apple issued the debt in 6 parts, including 40-year bonds. And that is your Bloomberg Business Flash. Francine.
Rutika, thanks so much. Now, Beijing's regulatory crackdown and the record anti-IPO suspension has Jack Ma's empire facing one of the biggest crises of its 2-decade existence. Well, we take a look at the roller coaster quarter for the world's largest e-commerce company.
China's financial sector is a young industry that does not have a mature ecosystem and is not fully moving. So today we are a country that bears the risk of lacking a healthy financial system.
Chinese regulators have summoned Jack Ma and other Ant Group executives for a rare meeting ahead of the world's biggest IPO.
The suspension of Ant Group's mega IPO shocking investors.
It's not surprising as they become big and very prevalent across the Chinese consumer market, that regulation is catching up a little bit.
You have this very charismatic, very powerful Chinese entrepreneur in a state capitalist authoritarian system that has no interest in that. But it's also because Ant Financial is the most important fintech company in the world.
China has unveiled new anti-monopolistic regulations.
I don't think this is a surprise. As you know, the Chinese market is in the process of constantly regulating.
And also depends on how the company reacts to the changing regulatory environment.
And the way that Jack Ma has recently been apparently treated, the Chinese don't make a distinction between the private sector and state-owned enterprises.
He has appeared in a video after months of speculation about where the billionaire tech giant may be. Now, this is a video to educators in China.
One can't disguise that this has been a considerable shock. It was a very dramatic event.
Once the problem solved, it will go back to the track to continue consideration according to law.
And of course, we'll have plenty more on Alibaba throughout the day, the week, and possibly months. In the meantime, this is what the markets are looking at. There's a bit of hope out there that we get some kind of stimulus in the U.S. No, it's not a story for today and tomorrow, but certainly that's starting to be maybe priced in. Global stocks climbing on this renewed hope. We're also seeing progress on vaccinations, and I guess some of the receding concerns about the volatile retail trading. Silver, look at that, pulling back from an 8-year high. More Bloomberg surveillance ahead, simulcast this time on radio and TV. This is Bloomberg.
We never intended it to be an action that was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
But thank you so much for joining us. What was the biggest thing you've learned about what a leader needs to be?
Well, it's really an emotional, or it's about being authentic, about believing in the path you're taking.
To be reckoned with than perhaps it was before.
It's probably going to end in tears for a lot of these retail investors and hedge funds.
The system is, from a financial stability perspective, still is robust.
We haven't seen signals that these trades will spark any systemic risk.
We're going to see a kind of regulatory catch-up phenomenon.
If you don't reestablish functioning Wall Street and stability, it's disastrous for the economy.
Everyone's looking for a boogeyman, but I think we're going to find out that nothing really has changed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Oh, this is going to be a good one. From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Lisa Abramowitz has stepped out of studio for the day. That means it's me and Tom Keene. I'm Jonathan Farrow. Futures positive up 27 on the S&P, up 0.7%. Tom, can we keep this on the rails?
Yeah, we're going to keep it on the rails. I mean, we got a busy day where we got the market. And, John, we finally got interest rates higher with the equity markets. But also, John, I think we can state after 2 hours, the squeeze is so over. Moments ago, John, silver and GameStop.
Okay, I'm moving down to 37. 120.37. This is where I'm going to place my stop on profit for all euro positions. Okay? That's it.
TV, you need to understand, John knows I bought 100 shares at $512.13. I'm still not covered that trade, John. I think there's hope.
Brutal for anyone who bought the top last week, and that's the move this morning. Negative, down, down, down. For the broader market, Tom, futures up 28, up 0.75%. You've talked about yields higher, the steeper yield curve. Let's talk about the headline for me of the last 24 hours. There are now more people in the United States of America who have received a dose of the vaccine than there are COVID cases in the last 12 months. Tom, that is quite a stat, and that just tells you about progress into 21 that we're already making.
We just talked to Dr. Adalja at Johns Hopkins, who made real clear we're seeing better statistics, John. We're seeing rollovers of the variances and the new viruses. They buttress up against that. But yeah, it's better news, John, and I'm sorry, it devolves right into the tape we see. I would say the most important news of the day is to see what Amazon and Alphabet do after the close, John, as they reaffirm that tech juggernaut we saw with Apple earlier.
Yeah, Amazon headline and earnings after the close. And Tom, that's where the earnings have been coming from over the last 12 months. I keep going back to it. That second quarter of 2020 was just absolutely phenomenal with the world shut down. Those big names generated terrific earnings growth. The story of this year, though, Tom, we know where the earnings have come from. Where did the earnings surprises come from in the back end of this year, the back end of 21? And I think that's what we've got to think about a little bit more.
Oh, we've got to readjust it. Shout out to Credit Suisse. So I think at the 12/31 date, John, they really partitioned. They were staying with tech while they looked at all the other stuff. And again, John, you were way out front on Russell 2000. That's done well as well.
Yeah, GameStop, a big weighting in a Russell. We'll talk about that in just a moment. Phil Camporelli joins us now, JP Morgan Asset Management Portfolio Manager. Phil,
away 146.
Let's talk about last week and Tom buying the top of GameStop or not. Can we talk about a cyclical trade, Phil, and whether you want to stay with it, how comfortable you are about sticking with it?
Sure, and we stuck with it through, the tumultuous parts of last year, especially going into the fourth quarter, and we stuck with it through last week. Listen, John, this is the signal through the noise. If 2020 taught us anything, it was to stay committed to the real true signals rather than the noise. The pro-cyclical trade means to us that growth in 2021 is going to be better than 2020. And that points to two trades. And you mentioned it a minute ago, Russell 2000 is one of them. We had as much as 9% of our fund. That was the most we ever had in the Russell 2000 coming into January. Now, an old boss once taught me, you don't get fired for taking profits. So we took some profits on the Russell in January, cut that to about 5%. Okay, but there's still the emerging equity trade. That's another pro-cyclical trade. And we're doing that in a pretty unique way. We're doing it through China A shares, which is just a play on the China domestic economy, which is becoming very popular, but then also through a broader emerging market equity tilt. John, those two sectors, small cap and emerging equity, have been the best two performers year to date, which has been great of the major asset classes.
Phil, let's unpack that a little bit more. There is a difference between a cyclical trade in global macro and a cyclical trade, domestically speaking, here in the United States. What are you leaning into more?
Yeah, so the Russell 2000 is a play on the U.S. This is as the vaccine goes, and you mentioned some great stats. More vaccinations than infections, about 1.3 million vaccinations per day. Johnson & Johnson coming online. John, that is a play on easy monetary policy, easy fiscal policy, as well as the whole kind of country itching and scratching to get back to normalcy, which we see in some respect towards the second quarter of this year. So that's a play on the U.S. And then the global recovery, because this isn't just a pandemic that took place in the U.S., even though it feels like that sometimes. The global recovery is best played, in our opinion, through the pro-cyclical emerging market equity allocation.
Phil, where's the next there is no alternative, that sweat that I've got to be on board, I've got to own it? Is it still the big tech, or is the new no alternative something different?
Yeah, so Tom, as long as the Fed keeps saying what they're saying, which is, we're on hold on the federal funds rate, which is the cash rate, forever, it seems like. Okay, so we may get some sort of change on quantitative easing towards the middle or end of this year. But in terms of the cash trade, that is going to continue to push risk assets higher. And I would agree with you. Listen, growth was the trade pre-pandemic.
What is it now?
Great companies. These are great companies. I think now it's going to force the hand of folks back into things like small cap and even, the tech. If tech was a winner before, it's going to be a winner. It's going to be a winner again. And then, let's not just talk about equities. I think that, in government bonds, we have very, very little government bonds for fixed income professionals. That probably forces folks out the risk spectrum into diversified forms of credit, which most people don't talk about. And I think one of the best things that you guys mentioned, the curve is at the steepest level since 2016. That is a very, very good forward indicator for growth. And then look at earnings. Earnings this quarter already. Do you realize, guys, 71% of companies are beating by at least one standard deviation? That is remarkable. And we would look to continue that as we get through this year.
So where do you see Q2, Q3 out into the end of the year? I get the enthusiasm now. As you mentioned, earnings are better. Thank you, Gina Martin Adams, for giving us so much support there. But Phil, what does the late summer look like? I mean, is it a mystery, or do you guys have a real conviction?
Yeah, so we have a real conviction in the pro-cyclicality. So, Tom, this is what I'll say. You're not going to have anyone come on your program and say buy bonds over stocks. That is a very
no. They do that on the real yield. They do that exclusively on the real yield with John Farrell. See it Friday afternoon.
Right. I've never met a bond person that doesn't like bonds. I totally agree with you there. Trust me, I'm a recovering bond person. So I know that. However, the real victory versus failure this year is what are the sizes of your trades? So not just being overweight.
I totally agree.
Bonds, and the security selection. And it's not quite yet for value over growth, but this pro-cyclicality, us having double the amount of emerging equity index versus the Morgan Stanley ACWI index, that is how managers are going to determine true alpha this year and true success this year. But that could also determine failure, right? Because the benchmark doesn't move. So it's sizing of your trade, not just saying you're overweight stocks versus bonds isn't enough. You have to ask your manager, okay, how big are you? And what are the particular stocks and bonds that you're selecting? That's going to determine success versus failure. And that's something we're convicted in throughout the rest of this year. So it's not really a mystery to us.
Yeah.
This is a fist-pounding view that these vaccines, just notwithstanding some left tail risk that we don't know about, that these vaccines are going to bring people euphorically back to this economy.
So, Phil, as we know, at some point, the Fed spoils the party. And the Fed is very, very keen on telling us that they'll maintain this asymmetric reaction function. They respond to the bad stuff. They won't respond to the good stuff. Do you think that holds in the back half of this year?
We think that they're going to achieve significant progress, in their words, toward their dual mandate by the end of this year. And John, in 2013, there was a taper tantrum. We all lived through it, right? That was a real miss for folks that wanted to take risk off the table, thinking that was going to tighten financial conditions. A tapering of quantitative easing is a good thing. You heard it here first. It's a normalization process as the curve goes steeper. So that is a significant progress. Where do we sign up for that? Everybody wants significant progress.
Okay,
so
Phil,
I think towards the back end of this year,
I'll cut this clip and we'll play it out in 4 months when we start having a real conversation about tapering.
Tough.
Hopefully it's sooner than that, John. Hopefully it's sooner than that.
Phil, great to catch up. You're looking well. Phil Camporelli there.
Good seeing you
JP Morgan Asset Management. Good to see you, sir. Neil Kashkari of the Minneapolis Fed. You see what he had to say yesterday, Tom?
Mention it.
Let me bring the quote. GameStop has gotten a lot of attention. If one group of speculators wants to have a battle of wills with another group of speculators over an individual stock, God bless them. That's for them to do. And if they make money, fine. And if they lose money, that's on them. This Fed does not want to respond to what we've seen in the last week, Tom.
I'm so glad you brought this up, and we see GameStop here, 137-ish. I think we're bouncing off that right now. John, as we mentioned to Joe Weisenthal earlier, this is about Robinhood and the cash bailout of the brokerage that affected this, that made this happen. I'm fascinated, John, where Robinhood is in 3 months, 6 months, 1 year.
And who buys that IPO, Tom? How that plays out.
Well, I think the haircut required to get them billions of dollars of bailout tells you who's going to own the IPO or own the entity afterwards. I mean, just the whole thing. Joe was great on it. I mean,
what did he say?
He said there's a mystery to it. Nobody really knows how that IPO, direct, or SPAC. I still don't get SPACs, John. Explain it to me over the next beverage of our choice. If they SPAC Robinhood, what does that actually mean? I mean, it's like Greek to me.
Where's Lisa? This segment was way too bullish, don't you think? 10 minutes of just bullish conversation.
Yeah, I know.
On the market.
Well, she's there. Maybe she's in gloom therapy. I don't know.
Just to throw cold water on the situation. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramov's back with us tomorrow. This market's doing nicely. This market has snapped back after the losses of last week. I did walk.
You walked to work?
Yeah. You'd be proud. From downtown.
I'm absolutely dazzled.
I went to the thigh-high boot shop that you told me to go to with the zips down the side. Like the ones you got. Yeah, and I got some. And they were incredibly useful.
Yeah, that's
really stable.
That's the way we roll in America.
Walking down the sidewalk in New York with those, Tom.
That's good.
I'm not sure if that's how everyone rolls in America. I'm not sure how those boots would play elsewhere. But they suit you. They look really, really good.
I got them from the guy that was the farmer in
I was talking to the ladies in the newsroom about them, and they said they like them too.
Oh, they do? Okay.
They do, so there you go.
Are you on Clubhouse yet?
I spoke to someone yesterday. I spoke to Anne-Marie, actually. Bloomberg's Anne-Marie.
She's on Clubhouse.
She's on Clubhouse. She's on Clubhouse.
Scarlet Foo's on Clubhouse.
Apparently I need an invite to get on Clubhouse. Do we need an invite?
I think
Is that how it works?
I think it's us. We should just get on Clubhouse.
We should do a team act, a double act on Clubhouse. Is that the wind? Is that the sound effect?
It's for radio.
A freeze in New York City. Looks pretty, though. If you live here, you hate it. I've gotten used to that. Up 0.8% on the S&P. It's going to be a great show, I promise you. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Biden intends to keep pushing for a large pandemic relief bill, even if he has to bypass Senate Republicans. The president and 10 GOP senators had what one lawmaker called a very productive meeting on stimulus options. A White House spokeswoman said there were areas of agreement, but also areas the Republican plan doesn't address. The president wants a package about 3 times as large as Republicans are offering. And it's an early milestone in the race to end the pandemic, but more Americans have received at least 1 dose of the coronavirus vaccine that have tested positive for the virus. As of yesterday afternoon, 26.5 million Americans had gotten 1 or both doses. The U.S. has been administering shots at a faster daily rate than any country in the world. In Moscow, a Russian court is deciding whether to jail opposition leader Alexei Navalny for up to 3.5 years. Prosecutors want Navalny to serve the term in prison instead of the suspended sentence he received for a fraud conviction in 2014. The court hearing comes just a couple of days after the second straight weekend of protests against Vladimir Putin. And fourth quarter profit rose more than expected at United Parcel Service. A surge of online holiday shopping boosted package volume and allowed the company to raise prices. UPS didn't forecast earnings for this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
And click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Let's just start with the numbers.
It would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
demonstrated in the last year that we can come together on a bipartisan package dealing with the COVID crisis. In fact, we've done that not just once or twice, we've done it 5 times. And I am hopeful that we can once again pass a 6th bipartisan COVID relief package.
The Republican from Maine, Senator Susan Collins, following a very long meeting with the President of the United States, Joe Biden, yesterday evening. From New York City this morning, good morning. Lisa Abramowitz out of the building, alongside Tom Keene. I'm Jonathan Ferro. Tom, I don't get it. Why are we not allowed in the same room? Joe Weissenthal's allowed in there. I'm not allowed in there.
It's the age factor here.
It's an age factor?
Yeah, I've got special rules.
So why is Joe allowed in and I'm not?
Joe's been sterilized.
He's been sterilized.
He was sterilized. We put.
Can I touch on a price action?
You can touch on the price action, please. I insist we should.
Futures up nicely, up 31 on the S&P 500. Almost breaking 3,800, up by about 0.8%. Yields coming with us, Tom. A break of 1.1% on a US 10-year, up 3 basis points on a session. And take a look at a euro. Euro dollar, 120.
Yes.
I would say take a look at euro sterling, comfortably below 90 pence now, Tom.
Yeah.
That's the vaccine trade that started to emerge in the last couple of weeks, dare I say the last month. And it's in sterling's favour at the moment and against the euro.
Interesting dynamics in euro yen showing at 126.36 as well. Has been stronger euro, weaker yen. It's a really odd revolution around euro, but I'm watching it. 119 to me would be very interesting. We're keeping you up on the bounces here. GameStop bounces a little bit. Let's look at silver right now. Really textbook roller over here of prices. For those of you on radio, it's real simple. We go up to 30, come down, and it has been well contained and has a definite downside bias at 27.61 on silver. Right now, as we heard the senator from Maine, we speak with Emily Wilkins of Bloomberg Government. Emily, what is the ability for compromise here to go to a center tendency from 1.9 trillion down to 618 billion? Can they find a middle point?
Well, President Biden and Republican senators said they would continue talking, they would continue negotiating. And I don't think that a bipartisan compromise is off the table yet based on what we heard the White House say last night. But remember, the White House also did emphasize that there are still areas of disagreement and that they do still see the Democrat-only budget reconciliation as a method to get this bill through. And they also kind of pointed out that, just because they're doing budget reconciliation doesn't mean you can't get Republicans on board. So it seems like negotiations are underway. Of course, this is all coming as Democratic leaders in the House and Senate are beginning to move on the foundation for a budget reconciliation bill.
The reconciliation is 50% of the votes, not the filibuster. I get that, 50 votes versus 60. I'm speaking as an amateur here. But Emily, what is the cost of reconciliation, the price of reconciliation to the Democratic president and the Democratic leadership?
Well, two things. Number one, Biden talked so much about being a unity president, about someone who could work with Democrats and Republicans. And COVID-19 is really a good issue for him to do that on because there is some bipartisan consensus there. It's going to be harder for Biden to probably get the same amount of bipartisan consensus on a bill to, say, raise the minimum wage or something in the lines of immigration. There's also the fact that budget reconciliation, and this gets a little bit wonky here, but you can't just do anything through it. There are certain rules on what can and cannot be done. And so there is a sense that if Democrats do want to pass this big spending bill, that might not all be able to go through budget reconciliation. There might be a couple pieces that just because of the rules can't pass through it.
Forgive me for asking a juvenile question about red lines, but where are the red lines, Emily?
I think as far as things that need to get done, they want to make sure that there is aid. The Biden administration has said that the danger is not having too much aid, it's having too little. The need to get something done. If you remember when Democrats won those 2 Senate races back in January, they did so in part on that pledge to give Americans more funding. And they're also keeping in mind that in mid-March, the supplemental unemployment insurance runs out. And no one wants to see that happen. They want to make sure that they're able to continue providing funding past that point.
Secretary Yellen says go big. I'm trying to work out what going big actually means, Emily. The do too much versus do too little. $600 billion, I think, for the Democrats and President Joe Biden is clearly too little. Is $1 trillion is 1.1, 1.2. And I know this feels really, really silly, but I'm just trying to work things out at the moment. All I see at the moment is great optics. Everyone gets around a table and has a conversation. I don't see major breakthroughs.
No, I think that's a fair analysis.
Okay, well done, all of you. We close all positions for euro at 120.37. I will calculate the profit and then I will basically let you know. Okay?
I think it's definitely a debate worth having, but I just don't think it's a priority.
John, do you see how she audibles that? She's like a star.
Well, she's a professional.
She comes out of left field.
She's also very polite. She's very polite. I think that was a long-winded way, Tom, of saying that's not really a relevant question in Washington this morning. But she's so nice to you. I don't know why.
It's floating out there.
Emily, thank you.
It's floating out there.
Emily Wilkins.
It's a fair, hey, as a DC resident, it's a fair question. Absolutely.
As a DC resident, there we go. Very diplomatic you are, Emily. Thank you. As a DC resident, it's a fair question, Tom. This is not a DC show.
Well, we could make it a DC show.
Do you want to?
I mean, we're worldwide. We're simulcast.
I don't think anyone wants my regular views on Washington, D.C.
We can talk about how is the virus in London? How is the pandemic? Still locked down in London?
Still locked down. Cases are heading in the right direction, lower, largely because people are locked down and vaccinations are happening at a decent clip. The worry, Tom, the worry is over the new mutations and the threat to those already been vaccinated and whether we can rejig, in effect, redevelop some of these doses that are being handed out in the future, Tom, to actually beat the variants as well, the mutations. That's the big worry, I think, in the medical community right now.
But the quarantine in a hotel thing has drifted away in the last couple of days.
When does that start? I've missed that, Tom. I saw the headlines like a few days ago.
I mean, I can understand how you missed it.
I think it was on air when the headlines broke.
I don't know. There's talk there about you quarantine and you stay at the Ned for 7 fun-filled days, have fish and chips,
you stay at the Ned.
Peas.
You stay at the Ned.
And, you know, that would be a brutal quarantine.
The Ned did become like a second home.
Yes. It'd be a tough quarantine.
Very well looked after.
Voluntary.
I'm not sure if that's where they send you. From New York City this morning. Good morning. Alongside Tom Keane, I'm Jonathan Ferro. Lisa Brown is back with us tomorrow. Future's positive.
Quote the Dow.
No chance.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Love Bill Murray. Hate Groundhog Day. Literally worst movie ever made.
Are you kidding?
Seriously, the worst movie ever made.
That's like Lisa saying she loves Tom Brady. It's a phenomenal movie.
I'm not even going to argue about it. Worst movie ever made.
Oh, John, look, folks, this is Pennsylvania Dutch going back 300 years, Groundhog Day. For those of you on radio, you know, 65 miles north of Pittsburgh, they do Groundhog Day. Full disclosure, Scotland gets it. They do a snake thing, and the Isle of Man has St. Bridget's Day and all that. But merry old England doesn't try to game what the winter's going to be like. John, you guys are missing the party.
Love Pennsylvania. Love the history. Spent some time at Penn State a long time ago.
I'll bet you did. Would you like to elaborate on that? Let's start with Thursday night.
At Penn State another time. I could give you some price action. Really shouldn't have brought that up.
Right, you should not have, but let's, while we're on it, let's stay on this for radio and TV.
I think we'll give it a miss.
Okay, let's get to Friday night. That was not as rowdy as Thursday night.
No, I think it was game weekend or something. Isn't the Beaver
John,
the mascot? Is that
John,
right?
at State College, Pennsylvania, every weekend is game weekend.
Okay. Trying to get this in shot. There we go. Futures up 0.8% on the S&P 500. On the Nasdaq, up about 0.8%. Really nice lift to this equity market this morning. Romain's going to run you through the numbers a little bit later, in a couple of minutes, in fact. I know. Amazon, after the close reporting, their headlining earnings. Switch up the board into the bond market, just quickly. 2s, 10s, 30s, yields up.
Big deal.
Up 3
Big
basis
deal.
points. Tom, steeper curve. Yields up 3 basis points on a 10-year, on a 30-year. Up about 3 basis points as well to 188. That's the bond market. Let me finish on foreign exchange just quickly. Thanks, Tom. Euro sterling. Let's take a look at this one. Euro sterling lower. That's in sterling's favour. Stronger pound. A break of 88 pence, just down about 1/3 of 1% on the session. But this is the vaccine trade we've been talking about. It's the idea that the UK is further along in the race. The idea that Europe is slipping behind even more, and the idea that the UK can reopen further, and a little bit more enthusiasm for European growth diminishing over the last month. And the UK growth story picking up. Growth differentials a story in FX, for Euro sterling at least. We can talk about that a little bit later. Now Romain's going to bail us out and get to the real stuff. Hey,
all right. Hey, John, good morning. I'll stay serious here. We'll start off with a couple of earnings out this morning. Alibaba reporting earnings. Of course, the numbers themselves are somewhat secondary. They did beat pretty much across the board. Everyone wants to know about the regulatory and antitrust issues. The company basically saying that right now it can't really make any assessment of what's going to happen going forward in the future with regards to some of those regulatory antitrust issues. Also said that IPO, can't really give any guidance on that as well. So still some concerns here about what the future of this company is going to be. What's that?
Is Jack Ma going to be on a conference call?
I don't think he's going to be on that conference call. They did not make an announcement about that. But of course, as you know, Tom, he's been laying a little bit low for a while now. UPS, who will be on that conference call, new CEO Carol Tomé. Of course, she took over last June. UPS, a lot of expectations here about how they shift more to these smaller packages that are basically kind of the bread and butter of e-commerce. The company did report earnings that pretty much did beat across the board there. And then we're getting also earnings this morning here from ExxonMobil and a lot of other large cap names. Real quickly though, Apple there at the bottom of your screen for those of you on TV. Keep an eye on that. They sold $14 billion in bonds at less than 100 basis points. The speculation, of course, they're going to use that to buy back a lot of stock. Flip up the board and let me give Tom his update here on GameStop and some of those retail trades. GameStop taking a leg lower. The silver stocks also lower. Gato Silver, that was the only U.S. mining company IPO we had last year. That rallied like 20% over the previous 3 days, pulling back a little bit. But look, the focus is now going to turn from those small cap stocks back to the big cap tech stocks. John, you mentioned it. Amazon reporting after the bell. Alphabet reporting after the bell. Amazon going to report, scheduled to report record revenue over $100 billion. There's only really 3 companies that have done that in the past. Walmart has done it consecutively. Apple Apple did it for the first time
Right.
when we got its earnings report. Amazon expected to do it when we get the results.
Romaine, Exxon out and moments ago saying the first loss in 40 years. Are they putting out that headline to affect a merger with Chevron?
Well, I mean, the speculation right now is that that would be a good idea. We had a lot of sell-side notes yesterday basically saying that a combination of those two would sort of make sense. Exxon did, of course, stand by that dividend a little bit earlier in the week, or last week. So we know that at least from a cash basis, they seem to be comfortable appeasing investors in that
And Groundhog Day, the movie, I thought, Romaine, I mean, I've seen it 14 times. I cry every time at the end.
I have a confession to make. Never seen it.
Oh, good for you,
I probably
Romaine.
never will.
Good
but
for
I
you.
am a Bill Murray fan, by the way.
Same here.
Who actually grew up down the block from me.
I am a Bill Murray fan
There you
too.
go.
Romaine, before we go, a little bit later on the close, what's the big focus for you guys when these earnings drop?
Well, I think the really big focus is really kind of the return of big cap and the support that it's been giving to the broader market. All this nonsense we've been talking about the last few days about GameStop and some of these smaller cap stocks. Yeah, it was fun. We had a lot of fun with it. But at the end of the day, what's supported this market has been Apple, Amazon, Microsoft, Netflix, Tesla. That's been it. Keep an eye on those names, because if you want to know if we're going to go higher, those companies will determine that.
Killing it. Now a timely interview. John and I have been waiting for this. We've been looking at equities, and we're all focused, GameStop and all the rest of it. Futures up 33. Rates come right back and move higher. Subhadra Rajappa is a Societe Generale. They have an acute heritage of mathematics and bonds. We're thrilled she could join us today on rate strategy. Subhadra, what level do you need on 10-year yield to signal breakout out of the range?
For me, that level is 120 in tens. I think that that 10 years are going to struggle to get past 120 until we see clear signs of return to normalcy, more vaccine deployment. So really the struggle is going to be trying to get past 120. Also, I think 120, 125 has implications for broader risky assets. If you talk to, say, equity analysts or corporate bond strategists, what you typically tend to hear is that, beyond 125 in tens, they could see some stress in risky assets. And the Fed is very much keen on keeping rates in place so that, you don't see the sort of rout in risky assets.
Subhadra, that's going to be a moving target. But I just wonder where they're comfortable and where they start to get uncomfortable. We know at the ECB, from our reporting, there are some levels of spreads that they are targeting. We don't know what those levels are, but apparently they exist. What do you think it is, the point on the curve that they're focused on, the level of rates, yields, that makes them a little bit more uncomfortable?
Well, I think any sort of rapid rise in yields is going to make them uncomfortable. So the repricing in rates has to be very gradual and something that they feel like they have a handle on. We don't want to see what we saw back in March, where you saw this unruly move in yields and the Fed had to come in and intervene. So if you do see a rise in yields, and if it's gradual and over time and warranted as fundamentals improve, then I think they'll be comfortable with it. I mean, our forecast for year end is 150 in 10-year yields. I think it's on the high end of street forecasts, contrast to what we had last year when we had the lowest forecast for 10-year yields. So I think that we will get there, but I think it has to be very, very gradual. I think a lot of that move in 10-year yields is going to happen in the second half, not so much in the first half.
What's positioning like, Subhadra, right now? It just feels like a massive change that everyone's on the same page for once over treasuries. Typically we come into any given year and people will be looking for something 100 basis points higher, something north of that sometimes. Seems like the ranges for estimates is a lot tighter than it has been in years gone by.
Yeah, it's entirely because of Fed intervention. I mean, Fed Chair Jay Powell last week basically shot down the idea of tapering asset purchases anytime this year. They're sort of on track to continue to buy bonds. So I think for the most part, positioning is kind of, is sort of favoring the range trade, i.e. when you start getting towards 1%, investors are broadly thinking, this is probably a good place to go short the market. And around 117, 120, you're going to start seeing people cover shorts. So that's kind of the range I think that people are going to be trading in.
That's right where I wanted to go, Subhadra. The idea here of convexity or the dynamics of the full faith and credit, a ginormous market as well. If we go 111 to 120, do we get accelerative tendencies? Can convexity click in a market as deep as the 10-year yield?
Yeah, I mean, you do have some convexity hedging activity, but for the most part, it's not going to come from the mortgage universe. I mean, for the mortgage convexity hedgers to come in and start hedging their duration, it's going to happen perhaps beyond 120. But I think within 1 to 120, you're going to see the range trade, alive and well, where people start to sort of take profits when they get to 120 and 10s.
How will the Fed respond at 120?
I don't think they're going to be concerned if the fundamentals warrant the rise in yields. I mean, we saw 10-year yields get to 117 or so intraday this year. So I think that if it's accompanied by strong data, a rise in inflation expectations, a rise in real yields, which is what we saw earlier on this year. So it's sort of a healthy reflation trade, then I think the Fed's not going to be very concerned. I think that they're much more concerned about sort of, dramatic moves higher or lower in yields. That's going to, disrupt the risky assets and financial conditions, generally speaking.
Subhadra, great to catch you up. Nailed the estimate in this bond market last year. Really did. Subhadra, great to catch you up. Subhadra Rajappa of SocGen. A little bit of Fed speak later. Cleveland Fed President Loretta Mester, she'll be catching up with.
As you can see, it worth to hold overnight, over weeks, your positions, because you will get nice profit. And by using our strategy, by calculate rightly and correctly to enter in the position, you can make a good profit from it. So anybody who wants to get strategy, you know where to see. It's on the red line. You can see the webinar, and these days we provide webinar together with strategy. For other people, if you like to keep following our trades and keep dreaming, you're welcome to do this. Okay? Stay safe. I'll speak to you later.
If things get better, we'll step back this time. We'll let it roll for a little bit. Now, that applies to rates, and they've been really clear on that. Where I think some people in fixed income still struggle, Tom, is on the asset purchase program. We really understand the rate story. Do we really understand the asset purchase program in quite the same way? At this point, I would say no.
I agree. There's a real mystery out there to asset repurchase. I get all that. I am talking, John, about finally today, or even maybe yesterday, I can't remember, to be honest, we're seeing a real linkage here, a correlation of higher yield with these equities,
well,
and
Tom,
that gets us to Amazon.
Okay, let me stick my neck out. If we take ourselves to 150 on a US 10-year, and we're still in the position we're in right now, I don't think the Fed wants to see that.
Did you say 150 or 115?
150. 115. We're 5 basis points away.
I'm just aggravated. It's Groundhog Day. I'm allowed to do that.
It's a terrible movie. I've had so much feedback about it.
Look, I just read Janet Maslin's review from a million years ago. She said it had a resonant and gentle comedy.
A gentle comedy?
It was nuanced.
Is that what she called it? A gentle comedy?
A gentle comedy.
Give me a position we're in right now. From New York.
I don't think they're going to be concerned
S&P
if
500 futures.
I like the maroon carpet.
Maroon carpet?
Yeah.
Okay. You want to talk more about this? Chris Crisanti's coming up. Looking forward to that. MAI Capital Management. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden and Republican senators have agreed to keep negotiating a bipartisan coronavirus relief package, but the president made it clear he'll keep pushing for a large relief measure, even if he has to bypass the Republicans. President Biden wants about 3 times as much in the bill as the Republicans are offering. And Senate Republican leader Mitch McConnell has waded into the intra-party fight over GOP Representative Marjorie Taylor Greene. McConnell didn't mention her by name, but he denounced what he called her loony lies and conspiracy theories. House Democrats are threatening to punish Greene if Republican officials don't take action over her past incendiary remarks and social media posts. And here in New York, we're being hammered by a snowstorm that could become one of the worst in the region's history. Forecasters say the worst is over. Still, the city could end up getting as much as 20 inches of snow. Rail and air service is still at a standstill, and roads are impassable at points. And the dating app where women make the first move, Bumble, has filed for an IPO. It could raise as much as $1 billion. Bumble plans to sell more than 34 million shares at up to $30 each. Bloomberg has learned that Bumble may list around Valentine's Day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Are down across the entire sector, and that's because of COVID. Now that we've got vaccines, they're being rolled out, things are looking better, and our share price is probably up 40 or 50% from the lows of last year. Secondly, as regards to strategy, I think the shareholders they're very supportive, and I think if anything, Anna, over the holidays, I think there's sort of a growing strengthening around the belief in the strategy.
It's been a tough time to be a shareholder in an energy player over the last several years. Bernard Looney there, BP's CEO from New York City this morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Bram is back with us tomorrow. Let's check out the price action. We'll start with the majors first. Whip through the S&P 500, FX, and the bond market too. Futures up 29. We've got a nice bid. We're up 0.8%. In the FX market, euro weaker, euro dollar. Almost there, aren't we? 120.32. We're down 0.25%. In the bond market, Yields up, curve steeper, up 3 basis points to 1.117%, 1117%, Tom. That's the story across the 35,000-foot view. Let's get to the story of the last week, Tom, just briefly. Let's take a look at AMC. We can take a look at GameStop, why not? And we can take a look at silver too. These are the glory trades of the last week or so. And Tom, this morning, they are all breaking down, and breaking down hard if you're looking at GameStop.
Yeah, well, it's really important. I can describe this on radio. They all have their own 3 technical characteristics. I'll end with silver because we're going to get to Mike McGlone. GameStop right now is making a second run down. It is nonlinear, and it has a plunge characteristic once, twice, and now 3 times this morning at a 146, trying to get through the low of 137 as well. AMC's got a life of its own. It's a moldy chart. Silver is different. Silver right now is having incredible difficult distribution of trying to make a higher high off the recent low. That is not happening. Michael McGlone joins us right now with Bloomberg Intelligence. Michael, silver trades differently. It trades contained, and it's actually open right now pretty much for trading. What is a characteristic of silver that you see from 30 down to 27?
Hey, Tom, it's living up to its reputation as the devil's metal. Silver volatility can rip your head off sometimes, but in this case, it's a little bit artificial, that pump, but it's going back into good support. 27 to 25 is a really good support level, and it's a fundamentally very bullish market. Now, one thing that we really noticed recently is open interest in futures increased a lot yesterday, which meant new longs, but it really jumped on Thursday before a lot of the news came out. So what we're seeing here, I think, is a lot of sharks battling sharks, hedge funds against hedge funds, and the difference with GameStop is silver is fundamentally bullish. It was already long, and it's very hard to squeeze it.
Jeff Curry of Goldman Sachs reaffirming, as Mr. McGlone does, the idea of silver fundamentally bullish. The volumes of the last day and the shorts that came in, and frankly, the longs that were there ever so briefly, Mike McGlone, how do you mop up that volume? John Farrow and others call it degrossing. How do you degross a tangible asset?
Yeah, well, a good way to make a market go up is whip out the shorts, but then it goes right back down. And the thing that's happening with a lot of the GameStoppers, the Reddit people, is they're buying calls. And my lesson with calls is you're renting a position. They're more likely to expire before it goes up, or if you wanted to. If you really want to own it, you're supposed to just own it. And I think that's what's happening in silver. We see the major institutions, the hedge funds, everything, just own that market and are willing to probably buy dips.
Mike, just build on that a little bit. The outsized influence that people think the short-dated call option trade has had on this market over the last, I would say, year for that matter, that it's driven people, particularly in the equity market, to also have to buy the underlying, the market maker. So you have this scenario where the tail wags the dog, so to speak. Mike, can you build on that just a little bit?
Well, I used to be an option trader. There's another way to hedge calls if you get lifted out of a call is to buy other calls. So you don't have to you want to hedge your gamma. You don't have to buy the actual market. GameStop was a one-off. It was a good, they targeted a good one. But for one hit, there's going to be 10 misses when people try to target these type of things. And the thing is also, hedge funds are doing the same thing. And I look at it, it's sharks battling sharks. And once in a while they win, but usually they lose. In this case, they just got lucky with GameStop.
Compare the difficulty of doing what happened with GameStop in the equity market on a single name, Mike, between doing it with that and, say, in the commodity market with silver.
It's very well. The market's so deep. Let's just look at a difference. GameStop before the run-up was about $1 billion. Silver futures open interest alone is $25 billion. And then you look at ETF, total holdings of ETF is another $25 billion. So it's 50 times the size of GameStop. And, of course, silver's been through these squeezes in the past, so it knows what to do.
Mike McGlone, what is the characteristic of ETFs with this volatility, 25 to 30? And let's say we come down, let's say we get back to 25 or even breach that. What is the character for our viewers and listeners that own silver ETFs?
Ignore it. I think for the ones the buy and hold types, ignore it. This is for the traders. Let the traders beat them up all they want. And the rule we learned is you want to sell them the shovels, be the broker, and let the traders kill each other. And most of them will lose.
Mike, great to catch up. Wonderful to catch up with someone who knows what they're talking about. Mike McGlone of Bloomberg Intelligence.
Wonderful.
Tom, it's just a different beast in the commodity market.
No, it is. It's tangibles, and Mike McGlone is expert at this, and he's been really, really quite good on the fundamental long call, as reaffirmed by Goldman Sachs and others. John, we got to show the GameStop chart right now. For those of you on radio, all you need to know is one leg down, two legs down, a bounce, and then another leg down. We have not gone through the 137 low, John, but
Yeah.
there's, you know, each of these stories, John, has a different characteristic, a different bid and ask, a different drift.
I couldn't agree more, and I'd add to that, Tom, we've seen several sequences with this story, and let's start with the first sequence. The first sequence was a really smart, well thought out trade, a stock that was very crowded on the short side, and a group of individuals got together and identified that, Tom, and that squeeze really generated some big profits. Then we got into the next sequence of things. Once you start driving this beast up to 500, if there's no fundamental reason for it to be there, once the shorts are out, Tom, gravity will take hold.
You know, and John, I'm going to say this with great respect because I don't have money at risk, but it's so hard to win at shorts. You need a good idea going south, in an industry group going south, in a market that's going south. And right now, in some of these things, you don't have that because you've got a bull market.
I've got to say, Tom, I heard some really worrying commentary over the last week. Things like hold the line. Hold the line. Hold the line for who? Hold the line for who? For the likes of Silver Lake?
Look,
to
folks,
convert the debt into equity and get out and book a massive profit?
We've tried to avoid the punditry here. We're just trying to talk to experts on this, like Michael McGlone on silver. The guy yesterday we talked to, David Axelrod, the attorney from the Securities and Exchange Commission, was just brilliant, John, on what Robinhood's optionality is forward. That's what we're trying to do here on radio and TV.
You don't want to get Ja Rule on?
No, but
see what he thinks.
Yeah, precisely. I couldn't. Who was that? Yeah.
Irresponsible, that's what that is, Tom.
Okay.
Just irresponsible. We can move on. Shall I get to the price action of the moment? Equity futures up 29 on the S&P, up about 0.8 of 1%. Yields up, curve steeper. It's a really nice session actually emerging here.
Yes, it is. Risk on
Yields
is
up,
what we call
Treasuries lower. In the FX market, though, the dollar coming back against the euro.
John, Thursday.
What's Thursday?
Tots, 3 p.m. Come on.
Who are they playing?
Tots, Chelsea.
After losing to Brighton.
2 teams. It lost. It's the lost ball.
How do you feel about
It's
losing
the
to
lost
Brighton?
derby.
I'm looking forward to that London derby a little bit later this week. You know more about the schedule in the Premier League than I do.
John, it's a derby. The lost derby.
Oh, okay. Good one. When's Lisa back? Tomorrow. Okay. Chris Crisanti next.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Your walk like in the storm?
I walked to work and I was thinking of Mayor Bill de Blasio as I was jumping over huge hurdles of snow and just muttering really nice things about him.
I'm sure you were. I mean,
I
the street's clear. I had a little bit of trouble getting the Bentley out of the garage today, but other than that, it was great. We welcome all of you on radio, particularly Rob Carolyn, good morning, giving us great weather reports for so many of you on Bloomberg Radio of how we mop up this storm and move forward, in this case, up to Boston. Good morning, 106.1 FM. On television, what you need to know is it's good at markets. Don, I'm going to get the data check out of the way so we can do the GameStop Act. Futures up 29, linked to yield 1.1113 on the 2-year yield. FX is giving me a 91. John, what's the significance of a 91 on DXY?
Look, one of the consensus trades for this year, Tom, was a weaker dollar, and we've just started to see some strength come back through. Yeah, and I think the other big consensus view was just global synchronized growth, and we're seeing it very sort of unsynchronized at the moment, Tom, because the vaccine rollout is very fragmented. The United States is actually doing pretty decently.
Yep.
I still say headline of the last 24 hours is we now have more people in America who've received a vaccine than have contracted COVID, at least by the testing that we've done. And I think that's a really important evolution of the last month or so, Tom, which is why we saw that huge move into cyclicals from the start of November through to the new year into 2021. And now we need to see the results of that. Can we reopen in the middle of this year, or at least pare back some of these restrictions and re-engage with the economy like we used to?
Chris Crisanti to join us here in a moment on the serious investment talk. John, let's do the GameStop Derby right now. Let us start with Robinhood, John. Huge cash input again. Every time they do that, John, they have to commit to their investors to give them more of the SPAC or the IPO down the road.
Look, Tom, it's the story of the last week, and it'll be the story of the next year too. And you and I have talked about it. Democratization of markets, getting access for more and more people away from just the institutional investor. And what we saw last week, Tom, is that we still haven't done enough. And we've talked about this already several times in the last 24 hours. The stock was still trading, but many people on those retail platforms lost access to it. Now, that's not to suggest anything nefarious was going on. It is to suggest we have more work to do on that front, Tom. And I think that's going to be the big push, not just for the next year, but for the next several years as well.
And a moving story into the weekend as well. You've got to believe there'll be a lot more on this. Look across Bloomberg for that. I do want to go through the three stocks quickly. AMC just south, no other way to put it. GameStop moments ago, a new low, 137.00, testing that new low right now, down 63+% from the 512 high where I bought 100 shares. And silver, a completely different drift function, a time series function. But yes, silver making a set of new lows as well. If I can get that up here, I've got silver 27.77. John, let's bring in someone on Amazon, on Alphabet, and on conservative managed investment. Christopher Grisanti with us with MAI Capital joining us right now. Chris Grisanti, what do Amazon and Alphabet signal this afternoon?
So, Tom, we're expecting decent earnings there, Tom, and I think it will be more of the same strong growth through the pandemic. Great companies to own when times are tough, but also great companies to own as the economy recovers. So, you know, the spotlight is on GameStop, but the action, the sizzles on GameStop, the stake is Amazon and Google and Facebook, et cetera.
One of the ways you go higher are selected walls of worry. Measure the walls of worry right now. Is there enough gloom out there, Chris, where you got major enthusiasm about a leg up?
Oh, I think so, Tom. I mean, everyone for the last week has been talking about how the markets are broken because GameStop has gone up 1,000%, and we need regulation. And it seems to me the markets are working pretty well. GameStop is coming back down to earth. Nobody's gone, no broker dealer has gone bankrupt, et cetera, and people made or lost the money as capitalists do. So, but I think the attention ought to come back to where the cash flow really is, which are for many, the large cap technology and other companies.
Two parts to that answer. Let's go with the first part first. Chris, orderly is a word we hear a lot. Can you just walk me through the distinction between the orderly price action that you witnessed and something you would consider to be more disorderly?
Oh, sure. Well, you know, obviously disorderly has a new definition in the dictionary under GameStop, and it was the short squeeze, really, of my 35-year career. But again, the system worked. You know, Steam is coming out. Investors, capital plugged the whole of the hedge funds and of Robinhood so that we could continue through it, and it did it in its own self-interest. And, you know, I don't think this is a terrible story of a broken system. I think it's a system that's stressed and then worked.
Any dislocations you took advantage of, Chris?
Absolutely. I think that's a great point, Jonathan. When prices move without fundamental reasons for them moving, there's always opportunity. So while the focus were on these small short squeezes, you know, the rest of the market, as you guys covered, really dropped the worst since October. So stocks like Facebook that came in with quite strong earnings last week, you know, and it's down 10 or 15% from its highs of a couple of months ago. Terrific opportunity. So we moved in there. We would move into Lockheed Martin. We bought a new position in Texas Instruments. We call semiconductors the oil of the digital economy. All of that stuff was left by the wayside, and the attention focused on this kind of tiny bit of the market.
Chris Grisanti and folks, GameStop breaking through to new lows, 132 level right now. Chris Grisanti, in terms of measured investment, it does come back to earnings and revenue. I guess we're seeing earnings resiliency. Are we seeing revenue resiliency?
I don't think yet, Tom. You are for obviously the companies that we all knew were resilient, like the Amazon. But I think you'll see more cyclical stuff like a Disney with the theme parks, like a Comcast. You'll see these companies show their resiliency as the economy opens up. And of course, the market is anticipating that. But we're in the middle of the cold, dark winter. And if you roll the tape forward, you've already vaccinated almost 10% of the population. If you roll the tape forward 3 or 4 months, it's hard not to be optimistic about the emerging economy. In fact, I'm more worried about overheating by the end of the year. But I'm very confident the economy is going to get better. And you'll see that revenue growth.
Well, the economy will get better and the revenue growth picks up. We're getting out front now. Are we pricing for the end of summer? Or are we already pricing into 2022?
Oh, I don't think so, Tom. I think when an economy comes out of a recession, and remember, this was a deep recession for many, you know, travel companies, restaurant companies, things like that. The revenue and earnings growth typically takes analysts by surprise on the upside. So how many of us are sitting at home planning that vacation we haven't been able to take for 18 months now? So I think you're going to see pent-up demand. I think you're going to see strong earnings. Have we priced some of that in? Absolutely. Have we priced it all in? I don't think so.
Things have changed a bit, though, Chris.
Continues higher.
Let me jump in. Tom, do you remember when we talked about Mr. O'Leary over at Ryanair? I think it was about 3 months ago. And he came on Bloomberg and he said the beaches will be packed in Europe next summer. They will be packed. 3 months later, Tom, does anyone think the beaches will be packed in Europe this summer?
No, and again, it is about the COVID and the vaccine recovery. But, John, as you mentioned earlier, the fact is we are seeing better statistics in the United States, and we have some form of a daily, and John, I'm going to say this on the x-axis as much as I can, it is a daily effort to get people vaccinated, and to me, that's nonlinear. That really pays off down the road.
Final question, Chris. Is there a U.S. bias here?
Sure, but I think you're being way too pessimistic, John, as usual, frankly.
Hey, Chris, I've got the flight booked for Italy at the back end of August. I've got skin in the game, Chris. I'm just asking the questions. I'm just asking the questions.
It's a matter of timing. It's not a matter of if. It's a matter of when. So the beaches will be packed sooner or later, and that's what we're investing in.
I hope so. Chris, great to catch up.
Chris, thank you.
Chris Crisanti of MAI Capital. Can we get back to GameStop quickly and AMC? Let's get the board up and have a look. These stocks are cratering this morning. GameStop, AMC, lower, negative, negative. Silver Lake last week, okay? This is what they converted the debt at, Tom.
Please. To
equity at $13.51. They sold that stake at an average price of $16.05. We trade right now at $9. That was one of the trades of last week. One of the big plays of last week. It came from Silver Lake.
Yeah, well, that's, again, strong hands finding a place in a moving market. I make jokes about it, folks, at 500, but there's real distribution. Taking a page from Luis Yamada, there's massive buying and selling at about the 320 level, John. And all these numbers are approximate, and I would focus, folks, these are really rough support levels. Those are my personal support levels. Maybe you find support at the 90-ish area and at the 60-ish area. That's not codified or cut in stone. That's just a quick eyeball off the Bloomberg terminal, John.
Brutal squeeze higher, then a pretty brutal move lower this morning. Tom, we need to talk about payrolls a little bit later in this program. Counting you down to payrolls Friday, negative 140, I think we were last month. We're looking for something at 50K this coming Friday, Tom, man. 50K does not get it done.
50K does not get it done. And what's so important here, John, is it dovetails into the yield move and the equity move we may see. And I'm sorry, the Fed has a mandate to look at that jobs move, and they're really not going to act until they see jobs move. And there's no indication of that right now.
ISM was okay yesterday. Manufacturing ISM, it was okay. Not as high as it was, but still okay. Employment component, still okay. Need to keep seeing that. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Brabbitt's back with us tomorrow. Deborah Fuller, University of Washington School of Medicine microbiology professor, joining us very, very shortly. Did you just quote the Dow?
I quoted the Dow futures up to
the Dow.
30,361.
Value add. Value add. Do you want to do it again?
No,
Where's the Dow?
The Dow is 30,359. The Dow. Amazon's going to do a 40-to-1 split. New Dow component.
Oh, okay. From New York. Just the fact that might be true. Don't you have a problem with that?
I don't think I should comment.
Okay.
I was just being light. I don't. Speculation.
This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden intends to keep pushing for a large pandemic relief bill, even if he has to bypass Senate Republicans. The president and 10 GOP senators had what one lawmaker called a very productive meeting on stimulus options. A White House spokeswoman said there were areas of agreement, but also areas the Republican plan doesn't address. The president wants a package about 3 times as large as the one Republicans are offering. And President Biden will keep U.S. tariffs in place on aluminum imports from the United Arab Emirates. He's reversing a last-minute move by Donald Trump to grant the UAE relief from the duties. The president says the evidence indicates that imports from the UAE may still displace domestic aluminum production. And for the first time in at least 4 decades, ExxonMobil has reported an annual loss. The largest oil company in the Western world posted a $19.3 billion write-down of U.S. natural gas and other assets. Excluding that giant impairment, Exxon returned to profit in the fourth quarter after 3 consecutive losses. Still, the company's financial performance has fallen to the point where its dividend is now under pressure. And fourth quarter profit rose more than expected at United Parcel Service. A surge of online holiday shopping boosted package volume and allowed the company to raise its prices. UPS didn't forecast earnings for this year. It blamed continued economic uncertainty from the coronavirus pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here. Our philosophy is to partner where we can and stand apart when we should.
Jim Snabe, thank you so much for joining us. What was the biggest thing you've learned about what a leader needs to be?
Well, it's really emotional. It's about being authentic, about believing in the path you're taking.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The ability to quickly test, to contact trace and quarantine is a linchpin of our national strategy and will be a vital part of containing the virus and stopping community spread. But in the interim, wearing a well-fitting mask is vital. Without masks, the virus and the new variants will have too easy a time continuing to grow.
That final point is the fear. That was Andy Slavitt there, White House COVID response team senior advisor. And it's a fear a lot of people are grappling with right now in the United States and the UK, across Europe as well, and worldwide. From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramovich back with us tomorrow. Let's whip through this price action. A lot going on. Equity futures, a really nice lift. The S&P 500 up about 30 on the S&P, up 0.8%. In the bond market, yields higher. Steeper curve, up 3 basis points. Euro dollar, a break down on the euro. 120.40. We come down 0.2%. That's the headline price action. Let's mention crude. Briefly, a break of 55 for the first time in about a year. 54.76 is where we trade right now, up about 2 percentage points and trade. So you've got your head around where we are at the moment. Tom, let's talk about where we are in AMC, GameStop, Silver, the glory trades of the past week or so. And wow, it has been brutal to the upside, huge squeeze on GameStop. It's been brutal to the downside as well. Just really, really whippy, violent price action. GameStop, Tom, this morning, absolutely plunging. We're down 40%.
John, to go a little mathy here on it, I got a log chart of GameStop up, and it's not log normal. The slope up, John, is about the same as the slope down, and convention would tell you when a short squeeze is over, that slope gets slopier, and you could look for a drop here ever more larger.
And if there isn't a strong fundamental reason to keep it up there, Tom, gravity, bang, that's what we're seeing.
You know, gravity is what we'll see. 134 right now. I don't have a low. I've got a different chart up right now. But on a log basis, as I said before, I've got informal support in the 90, 100 level, and then also down to 60 level as well. On the vaccine, this is my most important conversation of the day. Washington State and the University of Washington is definitive in microbiology. Leading their charge academically is Deborah Fuller. They do terrific work across all of biology and virology as well. Dr. Fuller, thank you so much for joining us. The Mayo Clinic tells me I need a tetanus shot every 10 years. Do pros like you just assume that we're going to be vaccinated for COVID out into the future?
We're anticipating that these particular viruses, as we see this virus evolve and we see new variants occur, that this virus is going to be endemic. And that means that it will remain in our population for years to come, and that we can anticipate occasional outbreaks and possibly even new variants to emerge. But we do have the weapon to fight that, and that is with vaccines, just like you mentioned with tetanus. That's every 10 years. We've studied that particular pathogen, and we know that's how often you need to get revaccinated to sustain your immunity. We're going to be studying that for SARS-CoV-2, and it could be just like influenza, where you have to get an annual vaccination to sustain your immunity.
Do you assume that this COVID vaccination is specific to this 2020 bug, or can it be used on other COVID viruses forward?
That's a great question. We are studying that right now in terms of, particularly with the development of vaccines, and trying to design new vaccines that will eventually protect not against just this 2020 SARS-CoV-2, but could we actually design vaccines against future variants that we haven't even seen yet? And the way we do that is we try to focus immune responses against parts of the virus that will not undergo viral evolution. They just can't, otherwise it would actually result in loss of fitness of the virus itself. So that's a futuristic study, a futuristic vaccine down the line. In the meantime, tweaking viruses and updating them to keep pace of emerging variants is a common practice, one that we know works, certainly for other pathogens, and we anticipate it should work for this one too.
Deborah, it's the question of the moment. I keep going back to it. Vaccine nationalism. Can you just comment on it, how worried you are about it?
Vaccine nationalism. Define that for me.
Please, absolutely, sure. So Europe right now does not want to export some of the vaccines. The UK is far more concerned about vaccinating its population beyond just the at-risk in society to try and get the whole population towards what some people would consider herd immunity, at the expense of not making sure that the developing world also has access to the vaccine, and therefore we could have a proliferation of the mutations that we've seen already in places like Brazil, South Africa, and the UK, and it would stop us from being able to reopen the economy. Is that okay?
No, that's not okay. That's a major concern. As long as there is virus somewhere in the world, we are going to be battling this pandemic, so it needs to be a worldwide collective effort to shut down this pandemic everywhere in the world, and that's why too we're looking at wanting to make sure that we develop vaccines that are going to be able to be distributed far reaches of the world and be cost effective and hopefully work potentially in a single shot.
Deborah, thank you. Appreciate your time this morning. Thank you very much. Deborah Fuller, University of Washington School of Medicine, microbiology professor on some of the key issues right now. The good news, though, Tom, and we should revisit it in the last 24 hours for the United States, is that we have seen finally the amount who have received a vaccine in the United States outstrip the amount who have contracted COVID-19. And I think that is a really, really important thing.
It's an important thing, and you got to see what the linearity is. You know, John, and I'm going to say this again, the linearity day after day after day, and I'm frankly optimistic on that. I speak as an amateur. John, we've got to look very clearly at GameStop really breaking down again. And I'm going to make clear, John, this is a very well-behaved decline. It's acting where you see a set of lower highs as you go along, tick by tick.
It is just ugly. Really, really ugly. And that huge crowded short that sat on top of that stock for a while, Tom, it's gone.
John,
not there anymore.
I want to talk about the real yield. I know you're going into production here, even with a huge blizzard. You're going to have your team of 30 to get the real yield out on Friday afternoon. And to me, what's so important here is inflation expectations. They haven't given up one iota in the last 48 hours. We've got that higher yield, but with it, higher inflation expectations where the real yield is diminished, a lesser negative statistic.
I think the Fed would welcome that, Tom.
Yes.
I think they're probably quite happy with that, Tom.
They want, this is really important what John said, folks. The Fed wants the market to act to take away the accommodation.
Let's whip through this price action right now. Bonds lower, yields up, curve steeper, equities advancing. Talk a little bit about crude as well. Almost a 55 handle. We did actually kiss that, Tom, just briefly. 54.78, up a little more than 2%. Tom, in just a moment, in a couple of minutes' time, I'll run you through what's been happening in high yield as well. I think for the Federal Reserve, they're probably quite happy with what's happening in high yield too. We've taken down a lot of supply and credit spreads have stayed tight. And a headline that crossed the Bloomberg literally just moments ago, don't know if you missed it, Boeing kicking off a 4-part benchmark US dollar bond. So there's more supply coming from the likes of Boeing. We saw Apple in the last 24 hours as well.
Yeah, they're high yield.
Getting away.
Apple's high yield with the 6 tranches.
Apple's high yield. Have you seen some of the pricing of this, Tom?
Could they have done a 100-year piece? I think so.
They can do what they want. 5-year, fixed, 32 basis points above treasuries for Apple.
Yeah, high yield.
Hey, Tom, you joke. It might be high yield in a couple of years' time.
Business. They're done.
If the Fed stays in the game.
Their products are done.
That might be all you get in a couple of years' time.
Nobody's going to pay for an iPhone.
From New York City this morning, good morning. Alongside Tom Keene, I'm Jonathan Ferro. This is...
What's good about it?
Bloomberg.
一个就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就会进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's a bullish morning stateside from New York City this morning. Good morning for our audience worldwide, live on TV and radio. This is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Ferro. Lisa Abramovich back with us tomorrow. Here's the move. Equity futures up about 0.8% on the S&P. The Nasdaq up nicely as well by a similar amount. You see it on the Russell there, up about 0.9%. The gains continue. I think the really important headlines in the last 24 hours, we've mentioned them a couple of times. The amount of people who have received a vaccine in the United States, now greater than the people who have officially contracted COVID. We're making real progress, and a stimulus conversation is ongoing as well. Switch up the board. I want to sit on this just for a moment. High yield spreads. Tom, this is high yield over the last year. Spreads. It's a huge breakout in spring. Wider.
Lisa?
Fed steps back in. Lisa won't like this move, though, Tom. Tighter. And near the post-COVID tights of the last 10
months. Yeah, but how much does that do to the Fed?
Pretty much all of it, Tom.
Thank you.
Is down to the Fed. But this is what the Fed wanted to see. Easier financial conditions. So the likes of Boeing, the likes of Apple, who, of course, Apple do not issue in this market, could come to market. And I'll give you some of the stats. 50 billion. That was the supply that was taken down in high yield in the United States over the last month in January.
Okay.
About a fifth of that, Tom, was from the CCC bucket. About a third of it was from energy. Those companies have issued, and this market's taken it down nicely.
Okay, so say it's $10 billion benefiting these big-name companies because the Fed wants price up, yield down. John, how does that redound back to small business in America flat on their back?
You hope that it keeps people employed.
Thank you. That was the theory.
It keeps people engaging with the economy, and you hope it supports small business. As we know, though, Tom, small business does not play in this market like the big players. Finish on this in crude, 55 handle, very briefly on WTI. Where are we now? 54.81. Nice rebound in crude. It's a bullish morning, Tom.
It is very bullish morning. Dow futures up 230, not to 31,000, but nevertheless 30,300. I do want to point out Brent, $58 a barrel on Brent crude. David Page with us with AXA, their head of macroeconomics right now. David, I love your paragraph looking at the tantrum. What is a tantrum, or tantrums plural, of 2021? What does it look like?
Well, we think we had a mini echo of what we might see. We saw a few basis points on the 10-year a couple of weeks ago. But I think as you move into the spring, markets start to focus on the fact that, the Fed isn't going to be there forever. At some point is going to start slowing the pace of assets, not even stopping initially, but just slowing. And although the Fed has done a good job at suggesting that now is too soon to discuss this, the time for discussing it is pretty soon, I think. And I think when the economy shows more robust signs of picking up, which doesn't feel like it's that long away, possibly moving into the spring, then I think the market's going to focus on how long the Fed can remain this accommodative. And I think, in the spring, we start to see some yields really starting to push upwards.
David Page, John Farrell just mentions Boeing and Apple with transactions as well. Do we have an idea here that that we see the flows of benefit here going to big companies and to big financials?
Well, I think to some extent, I mean, you've talked about the sort of tightening that we've seen come through in spreads, and obviously that's the Fed backstop in the market. But the Fed hasn't actually had to do that much in terms of purchasing those corporate debts in the secondary market. So really, what we've seen is a market that has had confidence that there is somebody at the back there, and that really isn't going to change. What is going to change is the short-term purchases that we're seeing coming through. But clearly what we're seeing is those lower interest rates over the longer term are affecting several areas of the economy. So yes, they're impacting the large companies, but they're also giving a real jolt to the housing market. We've also seen a big pickup come through in auto sales. So all of those interest rate sensitive sectors of the economy are really benefiting from those low rates.
Vaccinating and reopening. Nothing else seems to matter, David. So let's get some of your base case, your assumptions for the rest of the year. Chris Crisanti came on the program earlier and he said that I should keep my flights booked for the summer to Europe. He's that optimistic still. This is what a spokesperson for the UK has to say. We're still working on quarantine plan using hotels. I'm informed that that's set to take place in the middle of this month. David, when are you expecting things to really start reopening again? When did Tom and I get to go to London and do the show from London? When does that happen?
I mean, remember, from our perspective in London at the moment, reopening means that our kids go back to school and that maybe we're able to go to something other than the supermarket once or twice a week. So there's a whole sort of polarity that comes through here. And I think what we're looking for is some point in March to see some of these restrictions relaxed, but they're not going to go away anytime soon. Even though the UK is doing very well in terms of rolling out its vaccine, we're worried that the heightened contagion of the UK variant means that you could still see very high numbers in the remaining unvaccinated population through the spring. And that's going to be difficult for the government to ease those restrictions quite so quickly. So I think, the spring we start to see some easing of restrictions, but they're still in place. We're hopeful that, if the government can hit its 4 million a week target towards the end of this month, we're hopeful that we could get to sort of herd immunity levels sometime around the summer. So sort of July, August sort of time. But, there is a lot of uncertainty around all of those components to that.
David, how do you track that? Do you look to places like Israel as a case study, as a guide to how high the bar might be before we have to pare back restrictions?
We will do, but no, I mean, we're really working off very theoretic models at the moment, which is why we're so uncertain about the outlook. And that's before you start factoring in, the uncertainty that surrounds how the economy is going to react to restrictions. But no, we're assuming that once you get significant portions of the population vaccinated, so they're not likely to be consuming the amount of healthcare that those vulnerable groups normally do, then you can start paring back some of the restrictions, allowing the virus to spread a little bit more in the remaining population. And it's really a balancing act across that. But it's very difficult, and there aren't really many precedents. But yes, we will learn from those that are running slightly ahead, and Israel's an obvious example there, I guess.
John Farrow and Tom Keene on radio and television worldwide. It is Bloomberg Surveillance with David Page of AXA, Lisa Bramowitz in Puxatawney, Pennsylvania today. Silver breaking down right now, almost to a new low, 27.36, and GameStop just bouncing off a sub 130 number as well. David Page, I look at where we are, and you work for a big insurance combine. What is your post-COVID guesstimate of the trend of our actuarial assumption? Do we stay low in a disinflationary bogey, or can you actually build in, with all this debt, some form of a higher statistic for our actuarial assumption out 5 years or 10 years?
Well, I think when you're looking at the inflation aspect per se, it's very regional. And I think one of the things that's really changed our minds across the course of the last month really has been the switch that the Democrats now have control over the Senate, and the lean in that they're now doing towards stimulus. I think if the US is able to deliver anywhere near the sort of stimulus that President Biden indicates, the 1.9 trillion in the short term, but bear in mind this sort of campaign manifesto he had to significantly increase stimulus into infrastructure, that, I think, really brings forward the point at which the US closes, any forms of spare capacity. into sort of probably into next year. And then you can start to, genuinely look at building inflation and achieving what the Fed's trying to do, which is get a modest inflation overshoot. So I think that's plausible with the degree of stimulus that's being discussed in the US. However, if you look at Europe, if you look at Japan, it still looks a very long way from either of those central banks being able to achieve inflation close to their targets. The ECB's current forecast is for it to be well short even over the 2023, at the end of this 2023 horizon. And there you still have the problems of demographics, you still have some of the globalization issues, and worryingly, you've still got this sort of downward trend in inflation expectations, which makes it all the harder. So I think inflation is going to be something that's very geography specific and stimulus specific. And I think it's just that the US looks like it's really started to make some headway there.
Quick check of the price action. We're down about 42% on GameStop for those of you still following the likes of AMC, really soft silver as well. David, I want to wrap up with a 10-year call. Do you think Europe or Japan can engineer a recovery that leads to higher policy rates at the BOJ and the ECB?
Over 10 years or at any point in the near future?
10 years.
Over 10 years, yes. We do think over 10 years you should be able to get back to a point where you're starting to see those rates rise, primarily because you'll see some supply side responses as well. But in the more near term, certainly over the next 2 or 3 years, we fully expect to see the Bank of Japan and the ECB fully on hold over that period.
David, great to catch up. Thank you, sir. David Page of AXA Investment Managers. And Tom, that would be a key difference, wouldn't it? If they are able to manage an economy, a recovery, engineer that recovery that actually leads to higher rates, because let's be clear, the ECB did not achieve that the previous 10 years.
Yeah, there's no question about it looking out 10 years. But, John, I just want to look out the next 12 months. Do you understand the economic data today? We get the Ward's idea on automobile sales. John, I don't know where you're living, but where I'm living, I see across all price points, new cars, new cars, new cars. And, I mean, I'm sorry, Ward's has a run rate of 16 million. That's not a terrible economy.
No, but where you do see a terrible economy still, Tom, is in the labour market. We get claims on Thursday morning.
Another 900,000 or whatever.
That is just, I mean, Tom, 12 months ago we talked about 200K.
Well, and this is the partition, John, that Emily Wilkins and Kevin Cirilli are talking about, which is how do you apply income replacement, income substitution? And I'm not hearing that conversation yet in Washington, where they're really targeting it for those that have been hammered.
So it's a bullish morning. Let's get the board up just quickly and run through
I was just
things.
trying to do my Lisa thing there.
Okay.
Did I do okay?
I'll give you another 60 seconds to do it if you like.
Gloom, go.
Thank you. Futures up about, where are we? 9 basis points, 9/10 of 1% rather, up 90 bips. In the FX market, euro dollar 120.37, down by 0.2 of 1%. We have a weaker euro story for you. Intriguing stuff. Euro starting to break down. Euro dollar 120.37. Just as you thought you might have that move towards 130, we break down because it's not going well in Europe right now. And in the bond market, Tom, yields up, curve steeper. Look out for the financials around the opening bell. Yields up about 3 basis points.
They're all weaker. Yen at a 105. It really gets my attention. Nobody framing out a 106 yen. There's a lot of calls for range bound and even some for stronger yen, but 105 is a tip point here. Today, Brent crude rounded up $58 a barrel. You know, we're not near 60. That's a benchmark again as well. But this is the most constructive tape, John, I've seen in ages.
Can I promo my show?
Oh, excuse me. Which one?
Just the one that starts in 20 minutes. Is that okay?
Yeah, okay.
Lisa Shallett of Morgan Stanley.
Very good.
Chris Mamani of Lafayette College. So looking forward to that.
That'll be very good. On the equity markets, maybe a little bit away from GameStop.
Thank you for the real estate
to cover that.
To allow me to do that.
Well, yeah, of course. You want to get out front of the real yield as well? I'm sure you've got that all locked in.
Patience. It's only Tuesday. It's just Tuesday.
Okay.
We can do that tomorrow.
We can do that tomorrow. They got to decide whether it's going to be half hour, hour and a half, 2 hour real yield this weekend. That's with the 113 10-year yield.
Start at 5 minutes and work our way back towards 30 again. From New York. Lisa's back tomorrow.
The Alps.
Looking forward to that. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Biden and Republican senators have agreed to keep negotiating a bipartisan coronavirus relief package, but the president made it clear he'll keep pushing for a large relief measure, even if he has to bypass the Republicans. President Biden wants about 3 times as much in the bill as the Republicans are offering. Senate Republican leader Mitch McConnell has waded into the intra-party fight over GOP Representative Marjorie Taylor Greene. McConnell didn't mention her by name, but he denounced what he called her loony lies and conspiracy theories. House Democrats are threatening to punish Greene if Republican officials don't take action over her past incendiary remarks and social media posts. And here in New York, we're being hammered by a snowstorm that could become one of the worst in the region's history. Forecasters say the worst is over. Still, the city could end up getting as much as 20 inches of snow. Rail and air service is at a standstill, and roads are impassable at some points. And Harley-Davidson posted a surprise loss in the fourth quarter. Motorcycle shipments fell 48%. Harley is expected to unveil a long-awaited turnaround plan later today. And that comes just after months of cost cuts and management shakeups designed to make the company leaner and more profitable. And the dating app where women make the first move, Bumble, has filed for an IPO. It could raise as much as $1 billion. Bumble plans to sell more than 34 million shares at up to $30 each. Bloomberg's learned that Bumble may list around Valentine's Day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Bloomberg Surveillance, we say good morning to you. It is an extraordinary Tuesday here. Not only the storm in New York City up and down the eastern seaboard, it is partly February, there's no other way to put it, but also for the first time in ages, let's call it a normal market. Futures up 32, Dow futures up 241. We had 3,800 SPX here all through the morning in three big figures on the VIX at one point, and you really see it confirmed in the yield space, 1.11% on the 10-year yield. Look for John Farrow to give wisdom on yield here in about 12 minutes. Right now, I've been hugely anticipating this because I really want to dive in and talk about Robinhood and so much of the misinformation. And I'll be blunt, the weak presentation by Robinhood management over the last number of days. Barry Ritholtz provides clarity not only on his podcast, Masters in Business, can't say enough about that, but his writings and his notes to his clients as well. Barry, I love what you say about who is Robinhood's customers. And you make the distinction that everybody going long GameStop and right now frantically trying to sell are not really Robinhood's customers. Who is?
Well, it's the people who are sending money to them, paying for order flow, the people that actually generate Robinhood's revenue line. And, you know, we've talked about this before, the difference between cheap and free. Cheap is great because it means you're paying less and getting a service. But free raises all sorts of questions. When the old joke is, if it's free, then you're the product, not the customer. And it's pretty clear that the Robinhood traders were there for free trades, not understanding the platform, not understanding that essentially Robinhood is a counterparty to them.
I sound like Arthur Levitt in the legendary work he did moving from a quarter and 3/8 trade down to decimals. But Barry Ritholtz, has anyone quantified what free is in terms of that order flow? What are we really paying when we buy, say, 100 shares of Amazon this afternoon?
So you have to look at who your broker is and how they make money. There have been a number of articles, for example, about Schwab, and Schwab doesn't hide this fact. They're pretty transparent about it. They make money on the float. So if you're getting free trades at money on the float. So if you're getting free trades at Schwab and you have a pile of cash sitting there, they're capturing a little bit of float. It's harder for them to do when rates are as low as they are, but that's their model. The way a platform like Robinhood works is they're selling order flow. But by the way, all of this is perfectly legal, perfectly legitimate. It's disclosed, you know, on page 37 of the fine print. But understand that when you are not the direct client, when you're the user, it's a different relationship than, say, a hedge fund and a prime broker, where they're paying for services and they could demand a certain level of service. And when it's free, well, what can you demand?
Barry, I want to rip up the script here. Maybe this is your next Bloomberg Opinion essay. I'll let you do better than I'm going to do right now. It's not only the names involved in the debate of the last week, but it's the names not involved. I believe we haven't heard about Schwab. We haven't heard about Fidelity, and maybe there's other names that you know better than me. What are the people we haven't heard about doing or not doing that we see within this notoriety of Robinhood?
Well, first of all, if you're a trader at Fidelity or Schwab or Vanguard or any of the bigger platforms, one of the things you really don't have to worry about is a trade not being allowed because the brokerage doesn't have sufficient capital and can't take a risk. All this chatter about, I can't believe who got rescued, and when they froze the purchases on the platform, nobody was getting rescued. That's just the regulations they had to follow. They did not have enough capital to allow tens of thousands of people to buy hundreds of millions or even billions of dollars in whatever it was, GameStop, AMC, whatever was shooting upwards. And to their credit, to the management of Robinhood's credit, a week ago, they got a $1 billion line of credit from JP Morgan and Goldman Sachs. And this week they added another 2.4 billion in capital. So they're becoming better capitalized, but it's clear that they were unprepared to deal with the surge of buying and the risk to their platform that these people either don't make a payment or the stock collapses, or everybody involved in the ownership chain of an equity has risk that before settlement, the stock collapses and they don't get paid.
Barry, GameStop slips away. I'm going to just say, folks, it's an elegant chart from early this morning, 6 a.m., of migrating to a set of lower highs as we move on. Barry Ritholtz, tell us about the remorse of the bid slipping away. All of us, and trust me, folks, I've enjoyed this. You make a trade, you're brilliant, and all of a sudden the bid slips away. How do you counteract that in the trenches of your emotions?
So there's a very simple concept known as regret minimization that as a trader or an investor has to be somewhere in the back of your mind. And this was a Bloomberg column I wrote in 2017 when Bitcoin had run up to about 19,000 at the time. And specifically, you have to look at this not as, is this going to go up or down, but hey, if I don't sell here and it goes down, how do I feel versus if I do sell here and it keeps going up? And it's not about maximizing your performance or generating the highest possible return. It's about, what am I going to do that I'm not going to regret for the rest of my life? If you're a person who's making, a reasonable living of $50,000 or $100,000 a year, and suddenly you're sitting on a $10 or a $20 million windfall, that's a life-changing amount of money. That pays the mortgage off, your retirement, the kids' college. And so at a certain point, you have to decide, hey, am I going to continue to have fun with this on the possibility that it goes to who knows where? Or do you make a decision, do you ring the bell and make your life satisfaction that much better and make the lives of your family and children better for the rest of the next 3 or 4 decades.
We're in that process right now. Silver giving me a trend here, 27.57. It's weak, but it's there. GameStop really ugly. Barry Ritholtz, I'll let you get back to where you step in and go long GameStop. I'm not sure where that is this morning. Mr. Ritholtz, a brilliant thought there on how to get out of painful trades. If you are long GameStop, it is painful. I got a 128 now on GameStop, but I'll tell you, it's been a very difficult road since 6 a.m. this morning, and really a path from 320 down to 128, and we'll have much more on this, no doubt, through the morning. I want to get back to Alphabet, Amazon, the real market. Futures up 34, Dow futures up 257, the VIX in 3 big figures, 27.40, and all of this rounded up. I can do it to a Gladys Knight and a pip. I can round it up to 111.51, make it 112 on the 10-year. That's an important moment for the bond market. Somehow, John Farrell will mention that here in the coming minutes. I know Paul Sweeney and I will on Bloomberg Radio. At 12 noon, David Miliband, the former UK Foreign Secretary. This is Bloomberg. Good morning.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City for our audience worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes to go until the opening bell. We have a bullish Tuesday morning for you. Futures up 0.9%. We're up about 34 points on the S&P 500. Let's get straight to it. We begin with the big issue. Last week's high flyers breaking down.
Remember that there's a lot of leverage in them, and they're margin calls.
When you go into bigger, more established markets,
It's not the same dynamics that's been so successful with GameStop.
it's very difficult to corner a market in the same way and magnitude.
It's not like a game of musical chairs.
Ultimately, these forces balance out.
This challenge of excess liquidity in the market.
It's probably going to end in tears.
Joining us now, the Bloomberg team, Kelly Lyons and Abigail Doolittle. Hey, Kelly.
Hey, John, well, the house of cards may finally be starting to collapse here after a parabolic move upwards. So for so many of Reddit day traders' favorite stocks, we are starting to see a steep reversal. GameStop, for example, if current pre-market losses hold, could have lost about 2/3 of its value over the last 2 days. Similar story for Cost, steep losses for Express and others as well. Nokia really the only outlier here. And it's not just in the popular equities. Silver turning the other direction as well after the CME asked traders to put up more collateral because of the recent volatility. Really broadly, you can just see the euphoria, that frantic buying frenzy losing steam. Now, of course, the losses we're seeing are nowhere near the magnitude of the run-up we have seen in these names. And to this point, investor losses haven't been too painful either. Remember, Robinhood put restrictions on 8 stocks that were in place yesterday. That meant there was only so much investors were allowed to buy, and as a result, also limited their losses. Cost, for example, as we can see here, fell 45% from Friday's close in the Monday session. But because of a 2-share buy limit, investors only would have lost $50 from the open. For GameStop, that maximum loss was $92. But more pain could be on its way if today's moves are any indication. And as for the reason why these trades are starting to reverse, John, remember this all began with short interest. Reddit traders targeting stocks that were heavily shorted, buying the shares to squeeze out the shorts, thereby sending the stocks even higher. But now a lot of those shorts have already been squeezed out, forced to cover their positions. And as a result, when you look at GameStop, for example, whereas at one point where short interest had represented 145% of the available shares, it's now down to only 39% of float, the lowest level since 2018. So that short squeeze momentum is inevitably fading. The question now is whether or not this is a real inflection point in the mania, John.
It is so hard to keep up. Kelly Lyons, thank you very much. Kelly sticking with us through the hour. Looking at the market ahead of the open, we're up about 0.9%, up 33 points on the S&P 500. Still bullish out there, Abigail.
Still bullish out there. But first, John,
to Kaylee's point, what goes up must come down, because we have the poster boy of those Reddit stocks, GameStop, really plunging here in the pre-market, down more than 40%. This after climbing 1,100% in the month of January. Really pretty incredible. Right now, this stock, $125. At one point last week, $483. So some of those retail traders are really getting killed on the day. Silver has also reversed its gain. Yesterday, silver was above $30. Now we have silver closer to 27 over the last 2 days, holding on to a small gain, up 2%. Probably some traders remembering what happened back in 2011 when silver went in a matter of months from $10 to $50. Right now, that does not seem to be happening. But to that bullish tone, John, we have the S&P 500 futures higher, the NASDAQ 100 futures higher. We have on this oil climbing above $55 for the first time in quite a while. Energy stocks, big energy stocks helping, bank stocks helping, technology helping, and confirming that risk on tone for stocks and commodities. John, take a look at the 10-year yield, back above 1.11% as investors are moving out of bonds and into stocks, John.
Looking out for the banks of the opening bout with that steeper curve, those higher yields. Abigail, thank you. Lafayette College's Krishna Mamani highlighting Reddit mania's impact on sentiment. He writes the following: the broader market has remained steady despite the unbelievable retail frenzy. However, it's unequivocally influenced investor confidence and the market structure's sustainability. Krishna joins us now for more. Krishna, let's start with sentiment. This is a sentiment-driven market, has been for quite a while, and some might argue always is. How has this hurt sentiment, if at all, Krishna?
Well, so I think so far it hasn't hurt the sentiment, and I think the down leg in the market was more because of things happening on the stimulus front. But at the margins, if this would have sustained itself for a lot longer, I don't think it could have been really good for the market. You know, as it is with valuations where they are and the economies and the condition it is kind of it is very concerning to begin with, and then you throw on top of that you know, things moving randomly in one direction, you know, 10 times, 15 times. That's not helpful for the market sentiment, I don't think.
Krishna, you've been constructive